trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show.
Hey, everybody. Let me get the screen share up here. There we go. So I'll explain what these lines mean in just a moment. I've got the market kind of surrounded today, up, down, sideways, which means this. I had 2 winners this morning on SPX from my sell trades. So little chop this morning was perfect, very different than yesterday where the market just kind of melted up all day. But was able to grab some 20% winners this morning out of SPX. Now I have this is kind of the nothing trade, which is just an iron butterfly. If price just stays and hovers around this 59.25 handle all day, I'm risking $40 to make $460. And then down here, I'm risking $20 to make $980. Up here, I'm risking $20 to make $980. So hopefully the plan for this is whether we go sideways or down or up, I can turn one of these into potentially a winner that closes out for net profit on all of them. So 20, 20, and 40, I have, what's that, 60, 80 bucks at risk to potentially, make hundreds of dollars in profit. The profit potential in some of these trades are pretty ridiculous. And I also think that the market would be relatively chill today, considering we do have FOMC minutes this afternoon at 2 p.m., but we also have NVIDIA earnings after market. So I think with that potentially mover, by the way, I might end up modifying my trade on NVIDIA. I do have a trade on NVIDIA. It's a low risk, high reward trade. I played it out based on an earnings move. I'm going to see. Let's see. Do I like this trade enough to take it? I put it in pending yesterday. It's not filled yet. Let's see. I'm going to. Let me double check a couple things here. Got a lot going on. NVIDIA 530 news break. Okay. So this one, we're trading at 135. Let me have a look at NVIDIA. NVIDIA's at 135. I ran the numbers yesterday. 8.11% is the average earnings move, which puts us around $10 to $11. And if we have a $10 to $11 move, what I was trying to do is basically, you know what? I'm going to move this up here. I'm going to modify this. So let me cancel. And I'm going to try to set up the same trade. This would be a call fly. Move this to a 150 area. We had about a 150. Yeah, 150 highs look pretty good. So if I try to pin this thing 150, that's not bad. All right, I'm going to try to get filled at $1 on this one. I'm going to modify this trade. So this would be something that comes out after earnings. I'm going to modify this trade. So let's do this here. This is going to be updated trade. Okay. I'm replacing NVIDIA trade from Tuesday with this instead. So NVIDIA 530 expiration. I'm buying the 150 call with 1 contract, selling the 150 250 call with 2 contracts, and then buying the 150 750, which is a skip strike call with 1 contract. And I'm trying to get filled for $1 credit. So the way that trade works out, if would be I'm risking about $150 to make $1 or also profit trap this thing for 350 bucks. So we'll go max risk would be $1.50. Max profit would be the profit trap of $250 plus $1 credit. So it'd be $350. would be profit, trap, plus credit. Okay, so that trade's going to be sitting and waiting to see what happens in earnings. I think even if we were to have a great earnings report on NVIDIA, I don't think it necessarily breaks the highs. So I'm going to try to profit trap it up there. If NVIDIA comes in a little bit lackluster, I mean, maybe some of the good stuff has already been priced in. There's, the big announcement coming out of Qatar. They're putting basically NVIDIA with like a big data center build out. But if we do have a positive earnings move, I mean, one thing that we know, it's $3.3 trillion. This has the potential to move the entire market. So NVIDIA, I mean, I think last year's gains of 20+%, like most of the S&P, I think like 17% of all S&P gains were because of NVIDIA. We know the Mag 7 was still a big part of the concentration, which is why it rotated hard this year. So anyway, if we gap up, I mean, that would be a pretty dramatic move. I'm only expecting about an $11 move, and that would be a move of about $13 to $14. So that would be beyond the expected move, which is another reason I'm trying to take a low reward, high risk trade. Make sense? All right. So I've got a pending order there on NVIDIA. Let me go ahead and get this added in. All right. So NVIDIA. So the trade is, expiration is 5:30. So 150 call, selling the 150-250 call, buying the 157.50 call. So $1 credit's what I'm looking for. Okay, so I'll post that in Pulver alerts. So this one is in the stocks and options section. So max risk would be $1.50. Max profit would be $3.50. Put in a risk graph on that one if you'd like to build it out with me. Okay, I'll get some currencies. Yep, just let me do my thing, and we'll get through some currencies. So let's do a this will be a butterfly. Where are my calls at? So these will all be calls. So this will be a May 30th expiration. Oh, this needs to be NVIDIA. And the buy call was 157.50, 150, and then the sell is a 152. There's the trade. So I'm putting it in for, I'm not taking the trade obviously at $2 credit, I'm putting it in for $1, but basically $1 would get me filled. It looks something like this. If I could, I'm going to kind of color this in. So let me use a green line. Let's make this a little bit thicker. Okay, that's about what it's going to look like. So I'm kind of letting price, come to me and see if I can get that dollar credit. But price is going to have to move up and move up a decent amount. And we'll see if this trade will work out. Okay, so the picture's in. All right, officially that is posted in 3, 2, 1 for everybody. Pulver alerts. 7 cents. Oh, son of a biscuit. I got a 7 cent. Well, what was that? All right, so I got a SPY as well for the upside of 595. We'll see. All right, I'm watching SPX for the day. This is going to be, so my day going into the close today, even after FOMC meeting minutes, a couple of spots, right? This one, For a nothing trade, it's an iron butterfly. This one for a butterfly spread, this one for a butterfly spread. Max risk for me is about 80 cents. Potential reward on any of these trades. This one's over $980, like max. I'm rarely going to get that unless I just perfectly nail this thing at the end of the day. This one would be 460, and this would be another 980. So if any one of these hits just even $100, $120, $150, I'll take the net profit on the day. I just want to see a price can go somewhere. Okay, if it doesn't, then it's fine. I made enough money this morning that I'm still net positive and I can sacrifice all these trades. But I would like to think that up, down, sideways, something's going to pay me today. Here's hoping. All right, what are we doing? Markets are pretty chill today. NVIDIA earnings, I think, is probably like overshadowing kind of all things today. I know the FOMC is this afternoon at 2 p.m. Like I said, it's unlikely you're going to say much, but you never know. We could have some exciting price action at the end of the day. Markets are still just kind of hanging back to see where are we going. Here's the weekly candle. I mentioned this kind of like inside candle trading the last couple of weeks. This goes back to the movement May 12th through the 16th. So this to me is where the range is at. I wouldn't get too aggressive one way or the other, but there's resistance here and there's support here. So I mentioned, if we break above 59.60, so if you're writing these levels down, 59.60 resistance. Okay, I think I could just go R for resistance. And then on the downside, it's about 57.70 support. Make sense? So I don't really think price is doing much inside of that. So, I mean, yes, we can go up, we can go down. This is about a 2 to 3% range right now. So from this high to this low is about a 3% range. I think this is, either the make or break of the market. Like this rally has been pretty magnificent, obviously blowing above this high here where I thought a lot of the technical resistance was sitting. That to me was kind of the blow off move that I'm like, okay, I was actually getting angry at the bulls, because this melt up was also not a lot of people were participating. The retail crowd is participating. This is one of the situations where I don't know if you know this, but the retail crowd was probably seen as the smartest money in the world the last couple of months because they were just aggressively buying everything. Okay, the institutional side, if you look at the commitment of traders, you look at the CTA data, you look at institutional flows, you look at Bank of America, managers, not really a aggressive allocation in this entire environment. So they're just kind of riding it out, which is typically why you see, maybe they manage risk better, maybe. But typically this is why you see underperformance, for funds. So that is not my style. I was actively participating in this, trading lots of options. It wasn't fun. It wasn't easy. I saw some big P&L to the downside as well. I basically went flat from 200K in profit to zero during April. Right, but it came back in spades, and now I'm up, 240 grand for the year, which is nice considering we're not at all-time highs, and I'm sitting at all-time highs for the portfolio this year, with hopefully plenty more to go. And I've resorted now to selling more covered calls, generating more income. There's certainly a skew in the market right now. If you take a look and see, look at the SPY, for example. If you are, if you have any shares of anything, you're probably going to get a bit more premium for selling calls than you would puts. If I went out to the end of the month, for example, if I sold a call, I get $4.12. If I sold a put, I get $3.84. That might not seem like a lot, but if you look at the percentage there, so 380 by 410, you're getting like 90% on the puts versus 100% on the calls. So you're getting a slightly richer premium on the call side, which right now tells me it's a better environment to be selling calls. Right? It's pretty cheap to also be buying puts. I mean, you can look at it both ways. But I still think that any pullback we may see, is going to be a buy the dip opportunity. So I mean, I like this. This high, this low, a 3% pullback is fine. That's like minimum pullback, which we had, right? And when we had that pullback, I was selling more options down here. If we have a 3 to 5 to even 10% correction, I'm still selling options. I'm still positioning for I'm going to buy some more and try to take a ride to the highs. So I'm a little stubborn right now. I don't want to necessarily be buying at this level. I'd like the market to reward me for some patience and discipline and not trying to just buy this melt up. So I'm putting in some income trades. I'm selling covered calls like crazy and lowering my cost basis. And I'm going to ride this thing out a little bit. If we get the highs, I'll make more money. My portfolio is tilted bullish. I'll make more money. But I'm not as aggressive as what I was back in April when this thing was bottoming out. And that's where we timed the market breadth indicator. That's where we took I bought the SPY at 496. I bought the Qs at 410, and I rode those things up for nearly $80 a share. I didn't ride them up to over $100 a share because that's what they ended up giving us with that US-China trade gap. So anyway, question comes in. What's that? Do you ever simply buy calls? Hardly ever. The only way I would buy a call is two ways, right? And I actually got an entire course dedicated to this. If I'm buying a call, I'm usually only going out about half the time. So if I buy a call for 60 days out, I'm going to try to manage that trade about 30 days into the trade. If I go out, 120 to 365 days, I'm usually managing those at the halfway point. Why? Because if you just buy a call, time is your biggest enemy. If you're familiar with, the theta decay or the time decay, once you get to that halfway point, it becomes a very slippery slope. Because once you're at the halfway point to about the 2/3, theta decay is killing your option trade. Time is your worst enemy when it comes to being long options. Okay. Now it's great when you're selling options because once you get to this point, all of a sudden your profits get a lot more aggressive if you're, having things close out of the money. But when you're long an option, this helps you preserve the value of that trade, right? And I also like to buy, if I'm buying a call option, I like to go at least a 50 delta or usually a 60 to 70 delta so I can take out some of that sting of the time premium. So to answer your question, buying calls and buying puts are pretty much my least favorite trades. I think that most traders get them dead wrong. I think most traders manage them terribly. I hate that you could buy a call, be right with the underlying direction, but have to pay too much in premium and not make any money on the trade. So I'd rather trade a spread, right? I need, price to move $1 versus $5, right? Or even doing a credit spread where I can have price actually stay sideways and I can still make money. So I prefer to do spreads a lot more. I have an entire video dedicated to that. If you go to my YouTube channel, you can just search in the video section. So search in videos, trading strategy. It's strategy session, I think. There. So strategy session right there. This video covers long calls versus a bull call spread versus a bull put spread. So debit spreads, credit spreads, long calls. Also covers a bearish trade like a long put versus a bear put spread versus a bear call spread. So debits and credit spreads. So in 90 minutes, I think this video does a pretty good job of showing, where the math is. It's the same instrument, it's the same trade. Break it down based on where does price have to be for me to make money. If any, and I share this video with a lot of traders because if you just want to understand the math behind the trade and you map out your trade, this will help you understand when I take this debit spread or credit spread or long call, what does price have to do for me to make money? Make sense? So anyway, you can check that out. All right. So I'm talking about, right? My strike price was correct, but I'm off about 2 days exactly. So if it's, poorly timed or price doesn't move quickly enough for you, you lose. And so if I do buy a call, usually I like to go out farther in time and also sell against that call to lower my cost basis. So I do a diagonal spread a lot of times. Right? All right. So hopefully that helps. Okay, this is where we're at. We're just still trading inside. So 59.60 resistance and 57.70 support. We'll see if those levels actually get breached here in the next couple of days. I'm curious how the month of May wraps up. Seasonality wise, usually June is still a positive month, but I could see a pullback coming. I could see June being a pullback. July is typically like one of the more bullish months of the year. But I don't think it's going to be super easy. I mean, if we have a respectable pullback let's say we have a pullback in June, July is now all of a sudden like, buy everything in July because August, September is usually a pullback as well, So I could see if we have a pullback in June, right? I could see this market through July, August, and September going kind of nowhere. And everyone that's like all-time highs, all-time highs. I mean, maybe it's November, December. Maybe it's Q1 of next year. Maybe, you know. So I mean, it's very possible. You have to wrap your head around this stuff. What if the market has the high end for the year and the low end for the year, and the rest of it is we just kind of tread water. You know, I think there's still some hurdles to overcome. I still think there's some trade issues and trade war issues that the market's gonna have to kind of digest and see like, okay, all we've done is threaten the world and then lowered it. We threatened China and then we de-escalated it. We threatened Eurozone and then we de-escalate it, right? So, I mean, nobody's being punished for what they say. Like Trump's like 50%. Nope. Let's just negotiate. 90 days, 90 days. Like this this rhymes a little bit with what kind of Brexit felt like for 4 years, which was we don't have a solution, right? So I think that in truth you're not going to ink these deals over the course of 90 days, right? We're talking major pivots in business protocols in operations to have a trade deal happen. What's it do with like pricing, repricing? Like there's a lot of moving parts of this whole thing. So I'm not saying this is a bad thing. I'm just saying that all of this is like noise, and it could create just a lot of indecision because there's not really any clarity. Meanwhile, what is happening in the U.S.? Well, there's no job losses, so the recession fears have dwindled quite a bit. We have tech that's coming back in a pretty big way, so tech is kind of leading the charge again. We had an opportunity with a crazy correction here back in April that was essentially the market breaking. The bond market is showing a little bit more resiliency, but not much. I mean, I'm actively trying to reduce my exposure in TLT. Um, I just don't want to hang on to this. I think that if we have a risk off trade in equities, that might provide a little bit of a pop here in bonds. But also, I mean, having said that, what if we're putting in lows here in bonds, right? What if we put in lows here in bonds, and the safe trade is if you have exposure and you're getting 4 to 4.5%. Let's say you're getting like 4 to 4.5% risk free, right? So why risk free? Well, unless the U.S. defaults, unless the U.S. can't pay back its debt, then this would be an issue. But the Fed can step in. There's all sorts of potential manipulation to save it. And honestly, like there's still foreigners, there's still foreign owned debt. There's still auctions that are doing well. I just think like the 20-year auction went poorly, but the short term auctions are crushing it right now still. And but global bond yields are rising. I think that's the weird thing that's happening this year is Japanese government bonds are rising in yields, causing a lot of other yields to rise as well, US being one of them. So, US 10-year yields are hanging out still well above those Liberation Day levels. Um, yeah, I mean, this was Liberation Day. We're way above that. This is, almost 40 basis points higher. I mean, that doesn't seem like a lot, but if you had to borrow something like a home that's 0.4% higher, that's a big difference to your bottom line. Like your monthly payment is going to be $300 to $500 more at that 40 bips difference, right? If you're going 20-year, these aren't any better. Here's Liberation Day at 4.5, it's up to 5%. This is 50 bips higher, you know? So there's two things to pay attention to. I know I've mentioned this, like watch the 10-year yield, watch the 20-year yield. We do have to watch it. The rate of change is the most important thing. So it's how quickly this would change, right? So this is why there's so much panic when the market ripped up so fast over that basis trade break when we had basically the bond market flinch, right? Trump flinched, 90-day pause. A lot of it was because of this. Now, if this just kind of slowly melts up higher, the market can absorb that a little bit better. It's still not good. It's still not good to have the 20-year, greater than 5. It's not certainly not great to have it better than 5.5 or 6. Um, I don't think it necessarily crashes the market as long as it's a slow grind. But what it will do is it will definitely curb growth. It's going to be hard to grow when you have a borrowing refinancing pocket that is dramatically higher than 2020, right? Everybody was able to borrow money in 2020 for essentially nothing. Now you're forced to refinance at a 5-year runway, and now you're borrowing at literally 500% more, right? I mean, imagine like a sub 1% loan in 2020, and now you have to repay that loan or refinance that loan at 5.5% or 6%. That's a big difference, right? All right. So anyway, this is just it's potentially like that blind spot where we're not necessarily seeing a recession, but something to keep an eye out for as far as growth is concerned. I mean, I don't know if we can go into like hyper growth mode and outpace our debts. I don't know if we can go to hyper growth mode and I mean maybe we can, But to me, that's like you run too hot. I think that'd be a little bit like the Icarus story, which is you run too hot, you fly too close to the sun, eventually it ends poorly, you know. But for right now, things just keep kind of humming along. Um, like my biggest forecast, and I think Nick and I are going to talk about this in the next week or so. My biggest forecast is that we end up having more of a global melt up versus just a U.S. melt up. It's been an interesting shift these last 3, 4, 5 years. Is like the U.S. has been like the one like bellwether and performer, and that's why we had American exceptionalism. Um, that's what it was called, at least, and it's gone a lot more than just the last 5 years. But post COVID, the U.S. has been, the best market, the best performing market, and this year like a very heavy pivot. It's not necessarily away from the U.S., but the U.S. kind of created a self-inflicted wound, and it forced a lot of countries to revisit and rethink, like, where do we put our money now? Well, let's invest in ourselves. You know, so there's definitely a lot of that going on. But I think the whole world is in the same boat. The whole world is riddled with debt. The whole world is drunk on cheap money and fiscal policy. And now that everyone is spending it, China's spending it, Eurozone has come out and spending it, U.S. is clearly spending it. I think that the bigger risk would be more like it's the upside. The risk is to the upside, which is not a bad thing. Like, it's great for assets. It's great to be long and watch your prices appreciate. The problem is how long does that run until the bubble pops again? So I don't think that we're immune to having another, really nasty correction. And unfortunately, I hope it's not to the degree of like a great financial crisis, but certainly a 30, 40, 50% haircut in the equities market could be another a case. So I would just make sure that my hedges are in periodically, like they typically are every, probably 90 days, every like quarter to, half a year. And then I have those hedges that hopefully offer up like 20 to 1, 30 to 1, 40 to 1. I need them. If I don't have them, then I mean, I'm just playing the game with the melt up, and I don't have any protection. So it's all like risk management. It's all protection to the downside, sacrificing a little bit. Like quarter 1%. I'll sacrifice that every quarter. Risking about 1% of my total account to offer up maybe 10 to 15, 20% of protection. That helps a lot. So, all right. Anyway, let's get some more top down stuff. That was my little rant for the morning. So let's keep going. So where are we at for the day? Tail of the tape. Everything's red right now. SPX is down slightly at 0.2%. Nasdaq is down basically flat on the day at 0.04. That's the Qs. Dow is down, same thing as the S&P, just down 0.2%. Russell down about 0.74. Interesting. This Friday on the 30th, I'm rolling calls out on IWM. VIX is up a little bit. Here's your VIX trade. So are we going to see higher highs and push back down into the 17s? Are we going to see another pop like we had here? This was this the day we had the European tariffs? Is that the announcement, or was that the failed bond auction? I don't remember. I think it was a failed bond auction afternoon where the VIX jumped up like 15%. I think that was last Thursday, Friday. Anyway, yeah. So I mean, maybe some slightly elevated VIX. What is interesting about the VIX is you look back at the lows from 2024. We are making slightly higher lows here. I'm not saying this is a floor, but I'm saying that we have slightly elevated volatility, which is slightly higher lows than here, slightly higher lows than here. And I don't think it's going to take much for the market to, give us like another poke into the 20s, maybe another poke into the mid to high 20s. Maybe we get 30 again. But a lot of that volatility can be contained. It's obviously a bit of a risky thing when we're going up into like the 40s, 50s, and 60s. But at this time, what we saw was a great time to sell premium and, sell options and also take a stab at the market breadth where you're buying that thing at like crazy lows. It worked out just fine. Okay. BGB, do you want to like go one step further in that question? Do you see a point in investing in realities? What does that mean? I mean, if you're trading the markets, you're not really investing in reality. You are trading something that is mostly irrational, right? Markets melt up higher and go longer than you think. They sell off and go faster to the downside than you think, right? Somewhere in between there, you've got extreme sentiment greed, you got extreme sentiment fear. Like, that's the challenge of the market is it's not reality, right? You take what should go from bottom left to top right. If companies get bigger, faster, stronger, things should go up. But because there's the swings of fear and greed, it's like we have, really low troughs and we have really high peaks, and we're just trying to navigate somewhere in between. A long-term investor would say, okay, long-term investor would say just, hold and be long-term and, don't look back. Well, that's fine. That's cool if you have a 10, 15, 20 year horizon. But traders like myself, I mean, I'm trying to navigate this stuff with, every kind of nook and cranny in the market. Are we going to turn here or not turn here? Do we have a pullback? I mean, my window for forecasting is typically within about 2 to 4 weeks. If I'm pretty confident I can pick a direction, I'll tend to trade that for about, 2 to 4 weeks. Obviously, like quarterlies are working out as well. That's kind of my, for me, like a long term would be I go out a year, right? I trade it for the year. That's kind of my investment thesis for a year. But a lot of my positioning and nimbleness is going to come within like about a month or less. Properties. Um, well, not out in Utah because the property market out here is already outrageous. So, um, I mean, I've been out here for 2 years. We're buying a house. We closed on it this week, so we'll have a property. And Utah may not be the permanent home, but it's a starting point. We've got some other markets we've been looking into. Um, I'd like to get back on Eastern time zone if possible. I think this mountain time is annoying at the end of the week when it's like every day starts at 6:30, 7 o'clock, every day, every day, every day. It's nice to be done early, but doesn't matter when you're up at 6 a.m., 6:30. So anyway, I'd like to have some more spots, but I just think the market needs a haircut. I think that what people think their homes are worth are not that. I'm curious what happens the next couple of years if we do have a bit of a housing. I'm not saying it's housing bubble, but I do think that rates are unaffordable. I mean, right now it's like just look at the number of the number of homes that are 3 times what they paid for, 4 times what they paid for, what they think, right? The reality is it's now 6 times the average salary to buy a house. The median home price compared to the average salary is about 6x. The historical average is about 2x. So it's way more expensive to buy a home. On top of that, you have higher interest rates. So you can argue all you want. Well, people had 15% interest rates back in the day, right? But their house was $50,000. Now it's $500,000 with a 7% interest rate. Like it's still very unaffordable. So, and it's not just the US. I mean, Canada has a crazy property market where they don't even have fixed rates. At least in the US, we can lock in for 30 years and have a mortgage, right? In Canada, you go variable and you get a 5 year lock and then you have to refinance. Or it gets reappraised with current rates. And that would be ridiculous because in the US, since COVID, about 60+% of all mortgages are like sub 5%. And I want to say probably closer to sub 4.5, 4%. And that's kind of created this insulation where you can afford to be in your house because everyone refinanced or bought cheap back in COVID, you know. So anyway, yeah. So look, there's all sorts of ways to do it. I mean, I know some wealthy individuals where properties are their thing. They like real estate. It's illiquid. I mean, you put a lot of cash into it, but obviously when you sell a property or you parcel a property, you rent a property, it's like there's passive income there. Um, it's always a good long term. I mean, at this point, look, you can only build so much horizontally before you have to build vertically. So if you own land, if you own building, I mean, it's the whole game. But I would not feel I would feel very uncomfortable if I was over leveraging myself to try to hang on and maintain properties. So I think for me, it's like I just want to live within my means, be comfortable, have time, have money sitting around that lets me make decisions on what I can do to preserve my wealth. So that's my big picture move. All right. Anyway, let's keep going. Dollar still not any fresh lows in the dollar. If we get that little pullback here, maybe it is the low to high, higher low to higher high. I still like selling the dollar. This is why I'm positioned on euro dollar long. We also, I don't know who's selling the dollar right now. If you're short the dollar, okay, fine. If it pokes the lows or goes a little lower, that's a great spot to be taking profit. But as I said before, if you're selling this trend line break, that's not the best entry, right? We're probably going to pull back and test this high again. You know, I don't think this dollar is just like dropping off a cliff. This was a really like 30+ year trend that we haven't seen the dollar underperform this poorly for like 30 years. So that's a monster move. Now I do think that the structure is there to continue to sell the dollar, but it's probably going to do this for a bit. In fact, if we make a slightly higher high, then I would say that this is a channel. This whole thing could be set up as a bear flag, and maybe this is a bigger picture sell trade. but it might take some time for this dollar to really consolidate. Okay. Oil, just like I've shown here for the last couple weeks, still in a range. I mean, potentially, is this a postured move with the double bottom? If we break and go higher, maybe, but I still think fake outs above the 200, fake outs above the 200. I wouldn't really trade anything on oil outside of maybe holding this floor. And I did this before. So I had some oil in here, made some money. I repositioned this, but I took the wrong trade. I did a 1-1-1-1. And it wasn't a bad trade, but I was risking about $1,000, and my profit would have been, maybe about $200. So as soon as price was gapping lower, and it just looked a little bit nasty, and I'm like, I think that's a little bit too much risk. So what I'm gonna do instead is, if we come back down to this low, I'm just gonna look at an oil futures debit spread. So I will basically go, at the money, or maybe one strike out of the money, and see if I can turn like 125% return on capital, maybe 150% return on capital, if I can position for that on CL. Okay. If we break up here, okay, I'm not going to chase it. If we break down here, I'll take my small risk here. I just think this is going to be range bound. I don't see a lot of companies or countries happy if oil is breaking below $55. Okay. I also didn't see a lot of companies and countries happy if oil's up here at $75. Right? Countries happy, yes. But as far as companies go, I mean, it's expensive, you know. So anyway, we'll see. No, like the demand, it's always supply and demand. There's always sorts of manipulation, and that's what makes oil, challenging. I'm sure that some people that love to trade it like crazy. I'm not that trader. I think that there's always that, like, to me, if I'm trading oil, it's all about risk, because I don't want an outlier. If I had undefined risk on oil, I would hate that trade, because all it takes is one stupid move on oil, and it's just like an anomaly slash black swan event where it busts up your account. So everything I would do on oil is going to be defined risk. Okay, natural gas. I added in. I think I did this last week on Friday. So UNG, I put in a $17 call. So right now that's already pulled in about 20%. Look, it's an income trade for me. Same thing with TLT. This one is my 89 that expires on Friday. It's up 98%. I could probably just close those out and roll this into my next, like, maybe 30 days or so, maybe less. But I'm just trying to get out of TLT without having, I don't want to get ripped off on like low premium. I only got 66 cents for that covered call. I think at this point it's like, as long as I at least get like 50 cents credit on a covered call, or a sell call, 'cause it's like a diagonal spread. So it's kind of like the poor man's covered call with TLT, but I did more contracts. Anyway, but I'm kind of actively trying to get rid of TLT in my portfolio. Not losing it, not taking losses, obviously just trying to work the cost basis down. But natural gas, I'm just also same thing. Like, I'm trying to, this might chop around here a little bit. If it chops around, that's fine. I'm just trying to actively lower my cost basis and get out at a level that makes me a few $100. How come your option trades cost so little anytime I want to place a trade with my broker? It costs me an arm and a leg. IGUK, BGP, you might want to have a conversation with Tasty Trade. I mean, that's why I've been using now for years. Their commissions are, I mean, it's the best I can find. I pay 60 cents entry only, no exit. I don't pay any commissions on ETFs that I buy. I don't pay anything on stocks that I buy. I don't trade anything on crypto it's like I have only commissions on futures, which is futures is entry exit. Um, and then on options contracts is only 60 cents. So, I mean, somebody will tell me, well, I'm with Schwab and they've got 40 cents, right? But it's 40 cents entry, 40 cents exit. So it's 80 cents round turn. TD Ameritrade, 45 cents, 45 cents entry, 45 cents exit. It's 90 cents round turn. I pay 60 cents entry only. And again, why? Because I take 40,000 trades a year. Literally, like last year, I took about 40,000 trades. So they take pretty good care of me. They give me some pretty low fees, and it helps. I mean, same thing in the currency land. My forex broker, for years, it was watching my bottom line. Like, okay, I made this amount in profit, and 15% of that was taken by spreads. Right? If you have entries, exits, you got your negative swaps. Like, all that crap started to bother me a lot. So I mean, that's why I'm heavy in the options market, where it's pretty cost effective for me to trade it. Yeah. All right. Gold and silver. Gold is following along. I'm curious, like how impatient everyone's being on gold. I am being super patient because I haven't done anything. I'm still enjoying the GLD. I'm still enjoying the melt up. If this wants to, correct a little bit, that is totally fine. The fact that we've topped out a little bit, we've got this big bar count that's still building every day at 400 plus bars. I'd love this to be, and it may be an interesting pivot. Like um, I said, if we have like a big rip in equities, then maybe this drops gold a little bit more aggressively. If we have a big rip in the dollar, maybe this drops gold more aggressively. But all I'm looking for on gold is any pullback in here. I'm going to start looking to bite on some option trades and then start to add some more shares. It's not that hard. I mean, somebody asked me yesterday, what's your best global asset? Gold. It doesn't always have to perform like it is. Like this gold market we've seen, this bull market we've seen is pretty ridiculous. But gold can go into a period of consolidation, and if you're looking for massive appreciation, you're not going to get it. But it's had a heck of a run, and I do think that as this potential uncertainty around the world builds or a safe haven builds, I mean, gold has cemented itself this year as the world likes gold. The world likes gold a lot. And I mean, the hard part is we're at all-time highs. So what do? I guess we can go higher. Is gold going to $4,000 an ounce? Is it going to $5,000 an ounce? Is it going to $6, 7, $8,000 an ounce? I mean, we know that finding it, mining it, processing it, refining it, it's way more expensive. I mean, this is why I don't trade gold miners, right? I mean, everyone's telling, oh, Chris, GDX is doing great. Sure, but it's done crap for years. And it's like if I want to trade and make money on gold, I want to make money on the spot price appreciation. Same thing on Bitcoin. You want to buy Bitcoin miners that have made $0, that their stock price doesn't resemble Bitcoin at all, or do you want to trade the spot price? I like the spot price. So GLD is how I trade it. Gold futures is how I trade it. But like I said, I'm trying to be patient, waiting for maybe some corrective levels, 3,000, 2,900, 2,800. Love to see those levels to start adding more exposure. Silver, still like silver a lot. I will scoop up some more silver at 29. I'll scoop up some more at 26 if they're even offered up. If they're not, then I will just wait. I'll wait for a breakout above the highs at 35 and see if this thing wants to make a run into the 40s for us. Bitcoin back to 107. I've got a cover call this week at 61 in IBIT. That's it. Everything else is uncovered. I do have a $45 hedge. So right here, I put in a December 45 long put, which is way out of the money. It's dirt cheap. I'm sacrificing about, I'm trying to think, maybe $2,000 of the 50 grand that I'm sitting on in profit. So it's a pretty reasonable amount. And I also think this hedge is going to work out just fine. So if price ends up falling back down into this area, I've got plenty of time in this trade to turn 250 bucks into, maybe $500 of profit, right? Turn it into 5 or 750 of credit. Depends on how aggressive this fall happens, but at least it hopefully isn't a wasted hedge. And all I'm going to do is lower my cost base a little bit and then hang in there. MicroStrategy at 360. I'm still looking at this one with a 310 call that I'm going to flip for income. I'm going to try to extract as much out of my call side as I can. Coin, pulling back a little bit. I don't know if I love Coinbase. If it came back down into like the 180s, 160s, I might throw some more option trades on it. Coinbase is now going to the S&P. It replaced Discover Financial, I believe. Ethereum, if you like it, this is a good looking trade. Small position here. Okay. Swing trade opportunity here, stop loss below. There's certainly a catch-up opportunity on Ethereum to get to the highs. So by the way, I'm gonna wrap things up in about 5 minutes. I've got some content videos to do in the next because videos due in the next hour. So I'm gonna wrap up here in just a few minutes. But I'll power through these next 5 minutes. Let's see here. Copper's pulling back in my old butterfly. I've got like a lottery butterfly, which is just a very small reward for high risk. It's out into June. If copper stays in this range, I would freaking love this thing. My copper trade right now is, $6, big deal. But my max risk is $90 for like a $1,400 payout. So it's kind of tricky. But I thought it priced out accordingly. I'm like, look, I'll risk $100 to see if I can make a 14-to-1 payout. But I've got to get really lucky and kind of hold this all the way to expiration. Japanese yen, I saw somebody asking about the Nikkei and the Japanese yen, so let's go Nikkei. Nikkei 225 is not at fresh highs, but EWJ was now pulled back a little bit. FXY is my way of expressing I still want to be long Japanese yen. Look, I'm not sure if long Japanese yen and up like bullish Nikkei are going to happen, but something tells me that we're not that far away from actually seeing the dollar yen with a major head and shoulders pattern breaking that 140 floor and going down to 120. So if that is the case, if the dollar yen breaks 140, goes to 120, FXY breaks this neckline around 65 or $66 and runs up towards this measure move around 75. I'm long these shares at 59 bucks. There's no negative swap. This is I talked about this yesterday in my afternoon session. You know, I don't like trading the Japanese yen if I'm holding it for longer than like a couple of weeks. I hate negative swaps so much. I feel like it is the most ridiculous thing in trading. And I've dealt with it for, 2007 to now 18 years trading forex, but there was only positive negative swap only a few times we really paid attention to it. It's when it really stings. Like negative swap is a thing, is real, right? If you're holding Japanese yen strength and you're holding it for months, it's just going to be paper cut, paper cut, paper cut every single day. And it will suck to watch that happen. And it's double and triple sometimes during the week. So my point is I'm like, look, I'll trade Japanese yen futures, pay a one-time fee, get in, get out, no big deal. I'll trade FXY like a stock, pay zero commission on it and hold this thing and have this be as like a hedge. So I'm not crazy invested here. I've got about 1,000 shares of FXY, but it's pretty cheap. And if we do make that break, then I'm going to get a pretty good run. So 59, oops, let's go 59 to like 75. I mean, that'd be about a 20, 25, 26% return on 1,000 shares. Like that's not bad, right? And that to me is a way to participate in like if we have Japanese yen strength, that's one way to participate it without trying to time everything. Okay. So to that point, I mean, this is the inverse of Japanese yen for the dollar Japanese yen. And this is what I'm saying. Okay, look, don't hold your breath. Okay, this is still a super important range to have this high at 162 and this low at 140. But the threat is if this floor breaks at 140 and it sustains with lower highs and lower lows, I'm telling you, we're going to 120, right? But would anybody be surprised if we hold this low, we spend some time doing this and chopping around, and we just end up being in a range with maybe this is support. Let's just mark out some big levels, right? Major support right there, which can become resistance, previous high, previous high, previous high. If you're a seller of this currency or a buyer, look, if you're a buyer, your stop loss is below the 140 handle. If you're a seller, well, looking for confirmation there, looking for confirmation there, looking for confirmation there, or looking for a double top. This can dance around 2,000 pips, but the big trade, in my opinion, is if we break the floor at 140, we're going down to 120. It's a simple head and shoulders. This is your neckline, left shoulder, head to head to neckline, right shoulder. That's why that 140 handle is so important. Okay. It might get messy, it might get noisy, but if it breaks, lower highs and lower lows. Okay. I don't know what this looks like for the dollar if it happens. If the dollar yen gets that much stronger, meaning yen goes stronger, I wonder what the dollar is going to be doing. Like that would be a big, either this is a huge risk off move or this is like a lot of repatriation going back into the Bank Japan system. I don't know. Or this is a lot of like failed faith in the US dollar. So, I mean, for right now, it's be careful. Watch your levels. It's not a guarantee that this thing's going to 120. But if we have a range between 140 and 148, we could probably dance around there for a little bit. The crazy thing about this trade is this. If I were to, I'll just make this super simple. If I put in a pending stop sell at 137.50 and 135 and 132.50 and 130, look, I've got to have a plan on those trades, but if I just set those trades up and price is filling them, there's going to be a stop loss. I could put a stop loss above a high. But if this gets filled, this is likely destination 120. So it doesn't take a lot to have a great trade. It's just I don't want to deal with all the noise that we're getting right now. If we're not breaking 140, we're not breaking 148, it's just garbage. So I'm not going to force a position trade. I'm not going to sit in negative swap and hope that it goes down. If it breaks 120, there's a destination. That is this conversation again about the Japanese yen deleveraging. And if that happens, there's your measure move, right? So just something to consider. I wouldn't be surprised if it happens. These patterns are usually self-fulfilling. When they set up, there's monster positions, there's monster liquidity hunts on these, and eventually it gets the levels to kind of shake out. But destination is it's an easy pattern to measure. They work all the time. So I don't think that 120 is out of the cards. It's just how do we break the floor at 140? What's happening in the bigger picture? And do we just have risk off? Is it risk off or is it weaker dollar? I'm not sure what's going to break it. Okay. All right. What else? I've got just another minute or so. I think that's about it. We did Bitcoin, silver, gold, oil, dollar, some currencies. Here's currency strength in the day. So yeah, I mean, pretty choppy. New Zealand dollar, did they cut rates last night? I believe they did. They were talking about the neutral rate now. So CB rates, to see if they cut rates last night by 25 bips. They did. Yep. So they cut by 25 basis points. So Australia is at 3.85, New Zealand at 3.25. My Aussie New Zealand discussion, we have pulled back a little bit. I'm still like I'm totally fine still just holding Aussie New Zealand long. Now that I can get some positive swap for it, at least for now. So level 1, 2, 3, 4. If it even goes down that far, but we have a lot of support down here. So I could see price holding around 106 and then making its way back to 112 or making its way back to like 114, 115. If we come all the way back down to parity, I don't know why the New Zealand dollar would get that much stronger versus the Aussie in this environment. So I think if I could get a chance to buy this thing back around 106, I'll level into it and then see if it pops back up towards like 111 to 112. I think that'd be a pretty good trade. If it goes down lower, that's fine. I'll wait. I'll buy more. I'll wait. I'll buy more. And I'll get one of those monster trades that I did back here. So anyway, Kiwi dollar pops back up to the highs, a little bit of noise. But if you're, buying in here, looking for a pullback, I mean, I think there's a swing opportunity, stop loss below, hopefully some open space trading. It's going to be dollar related. Okay. All right. Dollar CAD, meh. Dollar Swiss, meh. Dollar yen, we just did. A lot of the yen crosses, just be careful. And that's going to do it for today. All right. I'll let you go for today. One quick check will be the heat map. We have about 70% of stocks declining. Not a big decline, though, just like this light red. So not like big, bright, 3% reds. This is like, 1%. A lot of zeros, a lot of 1%. So pretty flat on the day. Why? NVIDIA. FOMC minutes at 2 p.m. It's probably a lot of the reason why. So we'll see where the market goes for the close. All right, I'll let you go. See you back here tomorrow. Thanks, bye.
If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hello. How's everyone doing? Hope you're all well. Long time no see. So, seems like we've got a more risk-on market at the moment, or more risk-on sentiment at the moment. We see the the yen's coming down, euro's coming down, dollar is holding its ground here. It's failed to break the sort of 98, 99 zone, which is good. I mean, I've been discussing this level for a long time, actually, the past couple of weeks at least, saying if we did manage to break down, I think the next stopping point would have been towards sort of 90 to 89. However, the fact that we have come down twice now and failed to break is, in my view, a very supportive factor. I also don't think the fundamentals for the dollar are really that bad at the moment. So it's very clear we're having sort of a reverse of the tariff move that we saw. Obviously not the whole thing. That was a pretty large move, but already we're having a little bit of that move with dollar bulls. We're seeing an outflow of euro, outflow of yen, and sort of just range bound here on the Swiss. We've got gold that's failing to break any higher. We're still within this downside channel, created a lower high here. But the problem with gold that I've got, I would theoretically quite like to go short, but in reality, I still can't really justify it just because of the trend. We've been moving up on gold for a significant amount of time. It's been pretty much a non-stop rocket. So for me to sit here and say that I'm going to start shorting gold, I think would be a little bit too aggressive for me. However, this is what I'm tempted. When I say tempted, again, I'm not going to, but in theory, I quite like this idea, looking for some sort of reversion back down to around 3,000. Again, as we are having that de-escalation from tariffs, I think it could be quite a nice play. We've got FOMC tonight. I don't think it's going to be anything overly interesting. Seems the markets are pricing in a pretty neutral tone. It's not, I saw people talking today, it's not a meeting in terms of it's not a stream or a live thing. It's just going to be a statement. So it'll be obviously key to pay attention to. But yeah, I don't think it'll be, well, it could be, but I don't think it's going to be a huge market mover. Let's just have a look here. Yeah, okay. So Edgefinder, bullish Nasdaq, bullish the S&P. Again, that's backing up the idea of the risk on market is back, or risk on sentiment is back. Euro pound bearishness is really nice. I was talking about Euro pound, I think it was 2 weeks ago now. And this was the position I was looking at. I think it was something like this, give or take. I was saying I would love to go short. Unfortunately, I couldn't take it last week because I was away. But yeah, I think Euro pound shorts are definitely the play at some point. And to be honest, where it is right now isn't too bad. The thing I don't like about Euro pound though is just the behavior of it. In my experience, it's very difficult to trade Euro pound based on just technicals because it's not like how do you explain it? I suppose it's not like a typical pair, if you will. It's more like a Aussie, New Zealand, obviously both very correlated currencies. But when we have this market, it's very, very common to have very aggressive upside, followed by sort of gradual downside as we correct that move. And the downside often comes lower than the initial move, the initial upside move. So it's great for mean reversion and DCA trades. But to go in with typical technical analysis using supports, resistances, fibs, whatever you use, for me, in my experience, it just doesn't really seem to behave as you would expect. So it's a little bit tricky to try and gauge a proper entry. So I think the approach I'd take here is a initial short position, relatively low risk at this point, and just see if we can get some more upside to then scale into that short and build up a DCA position rather than going in for a traditional, entry stop loss take profit position. So that's the plan there. Euro New Zealand's very bearish as well, but it's not really something I like to trade. So I'm just going to skip over that one for now. We can maybe revisit it shortly. Pound yen. Pound yen, I've seen quite a lot of talk about pound yen recently. Again, it's not something I trade very much, but I'll take a look, see if we can find something. Yeah, so I was looking at this. I think I was looking at this today, actually, on one of my streams. Seems decent. We've rejected the 0.5 fib level perfectly, actually. I mean, this was a pit perfect rejection right here. So that does indicate that we are in obviously a bullish market. We've created higher lows, higher highs here very clearly, maintaining above this 200 moving average. But the problem here is we're quite deviated from this 200 now. As we had a similar situation here, it's just typical mean reversion, it's general market dynamics. We will potentially see downside before we see upside as we revert back towards that 200. Obviously, that's not a guarantee. There is no guarantees, but that is what I would like to see before potentially going in for a position here. We've still got tariffs in play, although we're having, although we're having a bit of a de-escalation. That is still a factor that we can't just forget about. Actually, the DAX is very bullish as well. So the DAX has got a score of 10, which isn't surprising. I mean, the DAX has had an amazing recovery. It's fully recovered and created new all-time highs, which is phenomenal. It's really, really good. The monthly time frame as well is really impressive here. Massive wick rejection on this monthly and continuation to the upside. That's like a very textbook technical analysis play there. So the DAX, I don't think it's worth trying to fight this trend. I think that would be a little bit maybe naive is the word. So I think if we can come back into this level of resistance that we had, where we were at previous all-time highs, we've now used that as support. If we can come back down, fill this gap, then potentially head higher, I might look for a long position on that point. I don't really think there's much else. Bitcoin's bullish, but I don't really, in fact, I don't trade Bitcoin at all. But again, we could maybe come back to that down the line. Dollar yen's bullish. I've seen a lot of mixed things about dollar yen. Actually, I've seen a lot of people going long. I also know we have who is it? So Refinitiv and MUFG are both in short positions on dollar yen, which is interesting. So MUFG has a sell limit at 145.4, a take profits at 138.3, and a stop loss at 148.4. However, I'm just not really sure why. I'm not sure why they would take a short position. I mean, they must see something, obviously, otherwise they wouldn't be taking the trade, but I just can't really figure it out. Unless they're banking on some sort of tariff conundrum, or they're looking at just capitalizing on the dollar bearishness. But from a data aspect, I don't know. I don't see it. I reckon Nick might have to send a copy of the Edge Finder to these institutions, because sometimes their positions just don't make any sense. I'm saying that like I'm the expert. I'm better than them. Obviously not, but there you go. So yeah, dollar yen is currently bullish with a score of 7, which is quite nice. As far as I'm concerned, I wouldn't mind going long, but I would just need to see a confirmation of a trend change here. So we're currently above the 200. If we could see a break and then some sort of pullback, whether it just be a fib pullback, a pullback to the moving average, whatever it may be, is fine. Then I would be able to enter a long position, something like this. I'm not convinced we're going to go back to all-time highs around the 160 level, but I think with dollar yen, it might be worth just having a trailing stop rather than a hard take profit, because it potentially could go back up to 160. I personally don't really see that. I think there is a little bit more optimism around the yen that is starting to come back in. I mean, we obviously had the risk-off move from tariffs that did really bolster the yen. And since then, obviously, we're starting to trickle down now. But we've seen higher inflation in Japan, specifically actually due to rice, which is interesting, which obviously does feed into a rate hike narrative. Let me just pull up probabilities. Yeah, so there's a 90% chance, a 90% probability that the Bank of Japan is going to hold rates in the next meeting. But we're still on track, or still expected to have higher rates into the end of this year. Maybe not by much. It might be, we're currently at 0.5. It could go up to something like 0.55, 0.6. It might not be massive rate hikes. But of course, if we are seeing those rate hikes by the Bank of Japan, it's still a very good sign that we want to be potentially buying that market. What do I think about NVIDIA? I have no idea, Farhan. It's not my bag of tricks. Why is gold falling? Because there's no appeal for gold right now. Why would anyone want to be buying gold? Central bank buying slowed down. The risk sentiment has changed. Tariffs are de-escalating. Why would you want to buy gold? Tell me. So if anything, it's probably people taking profits and starting to get into short positions potentially. So when I'm saying this, I'm by no means saying that gold is going to crash. It's not going to. I'm not expecting it to go down to like 1900 or something like that. But it would make sense if we do start seeing gold trend lower a little bit and then potentially start coming back up. I've still seen the bank targets hovering around sort of 3,500 to 4,000. So something to keep in mind. Is there a presser for FOMC minutes today? A presser? I'm not sure what you mean by a presser, Tiger. Do you mean a press conference? No, it's, as far as I'm aware, it's just a statement. 5 years and still never got a payout from FOMO. Oh, that's rough. I've got to say, if you're still struggling with FOMO after 5 years, something's wrong. That's not like just a learning curve you need to get over. That's a big problem that you need to fix, because FOMO and greed and all these psychological problems are very normal. It's human nature, really. But as traders, you kind of come numb to it. You learn how to deal with it and you can get over it. And you should be able to do that within, a year, 2 years, and then it should become sort of something you're aware of and actively suppressing. So after 5 years, maybe look into what's causing that a little bit deeper. Why don't I give you proper signals, Abdul? Because you have to pay me for proper signals, my friend. I have spent many years learning this job. I put a lot of time into my research, a lot of effort. So why would I go and give that to you for free? What benefit do I get from that, other than just taking time out of my day to do free things for people I don't know? There's nothing free in this world, and if it is free, it's because you're the product. Never forget that. What do you mean gold and silver is legal tender? I didn't say that, did I? Is there a Fed rate cut in July? No. Well, maybe, but the current expectation is the Fed isn't going to cut until after December this year. So it's probable that we're going to have this whole year of the Fed just holding rates. Again, I'm not saying that's the guarantee, and that is what's going to happen. Obviously, I can't say that, but that's the general consensus at the moment between the institutions. As for gold and silver being legal tender, are you referring to the idea of why would you want to buy gold? Because it's not really, I mean, it is legal tender, but it's not really. You can't really go to the gas station and pay for gas with a bar of gold. They're not going to take it, I don't think, anyway. So that's not really, and that's not something you would. It's not something you'd buy gold for, anyway. Again, I'm just saying this is my personal view. I'm not saying gold will 100% come down to 3,000. I'm just saying at the moment it does seem likely. I'd be more on the side of gold coming down towards 3,000 than continuing higher, unless we see an escalation somewhere. Unless Russia Ukraine kicks off again and starts escalating, or the Middle East, or tariffs get worse. But as it stands right now, I just don't think gold really has much steam left. Abdul, A1 guys, just put my link in the chat for you if you do want to join. It's free for 7 days, so you don't lose anything if you don't like it. Florida governor signed an EO yesterday for gold and silver to be legal tender for purchases. Yeah, that's not going to do much. At least now, that if that catches on and it becomes like a thing, then maybe. But again, I wouldn't say that's going to be a reason to buy gold. The S&P 500 down. Is there any reason? I'm going to be honest. I've not paid any attention to the S&P over the past week or so. But when you say the S&P is down, what do you mean? The S&P is actually doing phenomenally well. It's up 23% from its tariff drop. But if you mean in the past 4 hours, you're looking a little bit too closely at that, I think. If you try and put a reason on every candle, so if you say, oh, why was it bearish here? Why did we have 3 bearish candles there? Why was that a bearish candle? Why was this bullish here? You're going to just drive yourself insane. Don't try and microanalyze one candle unless there is something specific like NFP or CPI. That's different. But just a random candle on a 4:30 on a Wednesday with no news, you're not going to find any solid answer that's going to satisfy you. It's just people buying and selling. Your successful rate signal. You can see on our website, we've got the stats on there, my friend. Okay, right. Let's get back on track. The pound seems to be doing very well also. which I don't like it. I've been saying it for the past couple of months, but I just really don't like the pound. I don't think it deserves to be valuable. I mean, obviously it does, but this anyway, I'm not going to go on a tangent. So, oh no, sorry, it's pound Aussie, not pound Swiss. That's what I wanted to see. Yeah, here. So pound Aussie could be a very solid trade actually at this point. So we've got there's two options I see. We either have a complete break, retest, continue up into these previous highs, or we see a rejection here, pull back into this 200 moving average support area, then look to buy at this point and take it higher. That's kind of the two plays that I've got in mind for pound Aussie, but right now there isn't really much there. I don't want to buy into this resistance. This resistance has been since April, so it's a little bit too strong for me to be trying to break through that, FOMC could be volatile. I don't think it's going to be anything massive. But the thing is, I said this last time, and it did actually. We saw pretty large moves. So I don't know. Let me just double check this here. Oh, actually, I don't have it. Where's that gone? Sorry, I had some notes on it. I'm just trying to find the notes so I can give you what I was thinking. Market sentiment is cautious ahead of FOMC minutes with expectations of a neutral tone. Recent Fed comments suggest potential rate cuts later this year, but inflation remains a concern. Markets are pricing in a neutral stance from the Fed with some anticipation for future easing. Inflation data and economic growth reports are closely watched. So that's that. That's all I've got for you. But if we are expecting a neutral tone, then I would be very surprised if we have anything that's going to be like a significant move. Made a loss today buying pound CAD. Let's have a look at pound CAD. Yeah, I mean, to be honest, this is a horrible market right now. It's stuck sideways. So to be honest, if you were buying this, especially as a day trade, you're just buying into chop. There's nothing there in my view. Suppose you could argue that there is this level here, and that kind of makes sense. If you look at it like this, it makes it a little bit more clean actually. So we could look for 200 moving average, continue the trend, price comes slightly lower, and then we start heading higher. That might be the play. But yeah, as it is right now, I personally just don't see really anything, to be honest. Yeah, that's pretty much it. What else do we have here? Aussie New Zealand. I know Chris spoke about Aussie New Zealand actually just before he went. I think it's quite nice actually. We were in a long position on Aussie New Zealand, and it's a bit of a difficult trade actually. We took a long, I think it was around here. We came back up to entry, and then we decided to close it for a slight loss. But I still quite like the long idea behind it. So actually, to be honest, just to basically reiterate what Chris said, some sort of DCA or long-term DCA positioning on the Aussie New Zealand makes sense. The only thing I'm not too happy with is the higher time frame. So this monthly time frame here, we've got a bearish trend based on 200 EMA. We've had 2 bearish months, upside wick here, failure to break any higher. We are ending the month quite soon. So to say we've not managed to hold any buys is a little bit concerning. Same thing here on the weekly. We came up, retested 200 moving average, and now heading lower again. So from a technical view, it's rough. However, as I said, the edge finder is bearish. So that does actually align quite nicely. I wouldn't want to sell it right here, but maybe if we could see a pullback off this sort of support level here into this 200, stop loss just there, and take profit maybe here. We could go for a 1 to 2. I quite like that idea. But it's just not quite ready yet. Nasdaq and the S&P. Let's have a look at the Nasdaq. Yeah, still got this gap. I'm not really very happy with that still being open, to be honest, but it doesn't matter what I'm happy with. Let's see. Yeah, I just don't really see anything. I think if we could come back down into this 50% fib level and again meet this 200 moving average, that might be quite a nice opportunity to buy. And again, we trail stops on Nasdaq rather than it being a traditional hard take profit, hard stop loss, because we've still got a lot of potential room to the upside. There's no reason Nasdaq can't come and break previous all-time highs. So yeah, I think letting it just run might be the play, and just locking in 1% profit every now and again. Again, S&P fall down. What do you mean? Let's have a look. Yeah, we're having a bearish candle, my friend. It's not a huge deal. I wouldn't be too concerned. Thought you're not streaming today? I didn't think I was streaming today either, OT. I got a message off the A1 guys saying that I was on today. So I was like, hey, you know what? That's cool with me. Still live. And I've been live all day, actually. I was live with Discord this morning, live on my channel this afternoon, and live again. Anyway. Yeah, that's pretty much it for the watch list. I don't have anything really beyond this. I was meant to do my research and things earlier this week, but to be honest, I just couldn't do it. Monday, I was still recovering from being away, and yesterday I had other things to take care of, so not gotten around to doing a full research, but that's fine. So the yen is still long. How are they moving? Let's see. What's going on? Okay, so net position is still bullish. Added short contracts, also added long contracts. Interesting. So it does seem they're quite bullish on the yen, to be fair. Net change is bearish though. That's fine, to be honest. I'm still. Oh, I forgot to say, I'm still in my Swiss yen short. It's currently not looking great, but that's no problem. So I've got these levels here that I'm looking to scale into. So when we come up to these previous highs, I'll scale in again short. So if we come back up to the all-time high here at around 180, I'll again scale in short. If we start breaking above this level and holding somewhere around here, then I'll be just cutting the position and looking to reallocate it at higher prices. Will I stream FOMC minutes? No, there's nothing to stream. I'll put a breakdown in the Discord as always, but for streaming, for me, yeah, not really a reason to. Am I long dollar yen? No, unfortunately not. I was looking at it last week on stream here. Yeah, I can't remember exactly where I was looking. I think I was wanting to go long here on sort of a retest of this level. Luckily, I didn't take it. So as I was saying earlier, I think dollar yen has potential. I think the dollar does still have room to come to the upside. I think the yen does have room to come to the come to the downside short term. So if we can break and hold above this 200 moving average, then potentially come back down for some sort of retest here. For me, this will be a great opportunity to get long. However, we do have institutions currently short dollar yen. So it might be a case, it might be a case of taking a long position short term, then getting into a short position for the medium term. But again, I need to do some research before I actually execute on something like that. How long until you was profitable? It took me about 2 years, give or take. Well, yeah, about 2.5 years, roughly. But, it takes people quicker, people longer. It really depends. I I didn't have a trading mentor either, so I'm not really sure even if I'd consider it a mentor. Really, it was like guidance, loose mentor on economics, but it wasn't like a serious sit down, this is how you trade type thing. So it took me a little bit longer. But yeah, if you've got a good mentor or even a good community, I think you could probably become profitable in a year, maybe a year and a half, if you really put the work in. Clement for gold. I'm bearish on gold, but I'm not bearish enough to take a short, if that makes sense. I don't see any drivers for gold to the upside, but that doesn't mean I'm confident enough to go short. Excuse me. So 3,000 is my target or mental target. If it doesn't go there, completely fine, no problem. I think gold's likely to have some sort of pullback to around 3,000, then maybe continue back up towards 4,000. But again, I can't really see the future, unfortunately, but that's what I would put money on right now. The reason I'm not happy to short gold is just because of this. I mean, it's like a meme coin. It's like, how many people do you think throughout all of this were trying to short and just lost money the whole time? I would say a lot of people. I don't want to be one of those people. So yeah, I'm just going to chill for a little bit and just see how it goes. If we can start breaking down, maybe if we can break the support level and start seeing some clear downside price action, then maybe, yeah. But for now, patience is a virtue. You know, it's funny, Yoshi, there was a guy shorting gold at 2,700. I remember he came at Nick, a trader Nick at one point, because Nick took a long position on gold. I think it was, I can't remember when, but yeah, he went after Nick while he was shorting it, and look at where gold is now. I found that really amusing. Thoughts on pound CAD? We might get a break above 187. Could you look? Let's see. Pound CAD. Will market reverse now? If I could tell you the market was going to reverse or not, I wouldn't be here. I'd be on an island doing nothing, enjoying the sun. So break above 187. It's possible. The pound is doing quite well. To be honest, I've got no idea what's going on with the Canadian dollar. Let me have a look at oil. Oil seems to be stable, just sideways, really. Yeah, I'll be honest. I'm not sure what's going on with the Canadian dollar at this time, but the pound seems to be holding its ground, which is good. So yeah, we could look for something like this, which is, account for this 200 moving average. We've got a level of structure through here that can obviously act as support. So we could see something like this. If we get the break above 187, as you said, then trail stops, maybe even look for an add-in or a scale-in. That could be a plan. Yeah, I know it's rough. What's the most important information to learn when starting to trade? I don't think there is like one thing. There's not, I can't sit here and tell you one thing and it's going to change everything for you. I think there's, excuse me, there's so many different aspects of trading that you need to understand. So, you could have an amazing strategy or, an amazing technical strategy, but have no idea about fundamentals. And then you've got no way to filter good trades and bad trades. Then you just get caught in noise. Or you could have great fundamental analysis and no idea on how to get into the market. Or you could have both of those and have absolutely no idea how to manage risk. So I don't want to sit here and tell you to manage risk well, because that doesn't do anything for you. My honest advice to anyone that is wanting to start trading or is new to trading, get a mentor. And if you can't afford a mentor, then make sure you're watching people that actually know what they're doing. So Trader Nick is a great example. He puts out great content. Chris Pulver, me. You know, there's lots of people out there that can help, but yeah, I mean, trading's a vast world. Don't forget, people go to university for years, spend hundreds of thousands just to learn economics and become an economist. So don't put loads of pressure on yourself to be, you know, the world's best trader or the world's best economist or the world's best analyst, because you probably won't be. And you know, I'm not saying that to be mean. It's just the honest truth. You know, I'm not going to sit here and say I'm the best at this or I'm amazing at that, because I'm not. You know, there'll be, I can guarantee you, there's some guy none of us have ever heard of that we don't know exists that's making hundreds of % a year just trading something that, you know, wouldn't occur to us. This channel is a great alternative to a mentor. I completely agree. What's your suggestion for gold? Saeed, feel free to rewind maybe 5 minutes. I've discussed gold a few times now. Save money, get a hair transplant. No, I think, you know what? I used to be one of those people. I never understood why people would have mentors. And looking back, it was because I didn't know what I didn't know. So I've got a mentor now, not a trading mentor. I've got a business mentor. And it's when, you know, you learn things you just didn't know existed. You'd had no idea it was a thing, or you could do it, or that's how it worked. And it's like, wow, actually that was very useful. You know, it's same as trading. So I think it's worth it, even if you can only afford a couple of sessions, or you can only afford a couple of months, or whatever it may be. It's definitely worth doing, because I think it's better to invest in your education rather than, and by the way, I'm not a mentor. I'm not trying to self-promote. I don't do mentorships. I think it's better to invest in your education rather than invest into donating to your broker. I think SPY creating a U pattern. I'm going to be honest, Rakesh, I've got no idea what a U pattern is. I assume it looks like a U, but what would you expect after that? So to me, this is very typical. In fact, no, it's not. It's not even a double top, is it? Let's see. Yeah, I don't see anything here. There's no fib, no double top. Yeah, I don't know. Jerry's, yeah, I appreciate that, but I think I'm good. Thank you, buddy. My goal isn't to get loads of views. My goal is to attract the right audience, and the right audience comes from knowing what to look at. Can I recommend any good trading mentor? Honestly, no. I don't really know any. I think it depends what level you want to go to. So ITPM by Anton Creel is very expensive. And you need to have a lot of capital to go into that, but you will learn everything. You will learn the investment banking side of trading. And that's more stock focused, I think. However, I think if you are serious about getting a mentor, don't go on YouTube, don't go on Twitter, don't go on Instagram. You need to go on LinkedIn, really. You need to get onto some sort of networking platform or some way to meet people that are, you know, actually doing it. Because the problem is, you can go on Twitter and you can find 50 mentors, and they're all just teaching recycled SMC garbage and nonsense that is just going to lose you money. In fact, I'm saying all this. I think there's a mentor in A1 Trading, actually. I might be wrong, so don't quote me on that. But I think, is it Ivan or Chris? One of them, I think, is a mentor there. So maybe that would be a good option for you. Jerry, no, I'm not interested. Thank you, though. I appreciate your hustle, and I hope you get some clients. Eurodollar's pulling down, which is what I love to see. I'm not in this position, but I think I might have to. I've been taking quite a lot of shorts on Eurodollar recently. Still banking on the idea that there's a lot of left side traffic here that I think will be corrected. I still think that Eurodollar is really overvalued. I said that it's overvalued around this point here. So whether I'm going to look stupid in a couple of weeks and it will be even higher, maybe. But I'm putting money where my mouth is. I'm currently actively shorting, so we'll see. Dollar Swiss, I think, could be a great trade as well. Actually, I think again, if we are, excuse me, if I am expecting some dollar strength and the rotation out of risk off assets into risk on, I think it's reasonable to say that we are going to see the Swiss get sold, potential buyers in the dollar, so dollar Swiss upside. Once I can see some confirmation, if we see a bit of liftoff, I might execute on this trade. Also, Jerry, a bit of advice for you on the sales thing. I wouldn't go to YouTube comments or live chats. I would go to someone's channel and recreate a thumbnail they've already done and send it to them and try and have a discussion. Pound dollar pullback. Yeah, it does seem to be pullback. Does seeming to be pulling back. Sorry, I'm clearing my throat a lot. I'm a bit under the weather. I think I'm either still recovering from my time away, which I hope not, because that would show my age, or I've caught a bit of a cold. Either way. Anyway, see, this is one of those markets where I just don't really know, because the pound is doing quite well. It's definitely stable, but I am expecting the dollar to continue with its strength. So there's a couple of different things here. I'm going to say it's going to go up or down, but just bear with me. So either this is a turning point. So we've had the break. This could be the retest here. We could come down and retest this trend line here, as we did right there, and just continue a very typical trend. Or we're going to see a similar thing as to what I expect on euro dollar, where we're going to have sort of a correction of all of this here, and we start coming lower. But again, I know that makes me sound a bit wishy-washy, saying the market can go up or down. Obviously, it can go up or down, but hopefully you get what I'm trying to say. So I'd be waiting for some sort of confirmation on one of those two, and a development on the economics front. Scarface Trades, what's up? How you doing? Let's see what retail's doing. Let's get rid of metals, get rid of indices, get rid of commodities, majors, miners only. So Aussie CAD, the majority long. Yeah, Swiss yen, the majority short, which is annoying because I'm short as well. So not a great sign for me. Might have to liquidate my position and add in again at some point. Fundamentals don't really support shorting euro at this point in terms of economic metrics, which are primarily short euro idea, because I don't bet against the US dollar. So my day-to-day strategy is only short euro dollar. That's all I do, short-only portfolio. And there's a couple of different reasons, but I'm quite happy just shorting euro dollar. If the economics are against that idea, so like here, for example, when we've got uncertainties, we've got outflow of dollar, there's a lot of issues obviously causing euro dollar to rise. In this situation, it will be more a case of just taking it easy, foot off the gas, no reason to be aggressive. But when I'm confident in the idea, I will be very aggressive. I might use slightly higher risk, and that's it. But yeah, it's quite simple, really. I think that's why it works, because I'm not really doing too much. But also, to be fair, I've not actually scanned the economics that much. Let me just check. Yeah, so this is a good one here. So the Euro economic heat map is poor. To me, as you said, it doesn't warrant. As you said, it doesn't warrant shorting. I would argue that it does. Then we compare it to the US, which is not amazing, but it's better. So that's a confluence for me. And as I said, I still think Eurodollar is very overvalued. Euro gained significant value from outflows of the dollar. that situation isn't there anymore. Don't forget, this also was off the back of the German fiscal stimulus. So all of that's kind of done. Why is Eurodollar still hanging around here? It has no right to be there. So I'm quite happy to put money where my mouth is and start shorting. And again, it's dangerous to say, I think this, I want that. But at the end of the day, that's what trading is, isn't it? I think it will go higher because of X, Y, and Z. I think it will go lower because of X, Y, and Z. No, Aaron, this isn't an interest rate decision. FOMC tonight is just a statement. As far as I'm aware, I might be wrong, but I'm 90% sure it is just a statement. So it's not going to be a case of we sit here and watch Powell talk. It will be more we get the statement and we see what's said. It'll give us a bit of forward guidance so we can see what the Fed is thinking or what's going on in their view. But it seems like it's going to be quite neutral. So I wouldn't say it's going to be a huge market mover, but anything could happen. So who knows? Okay, I've not looked at silver in a while. Let's have a look. Hold on. That's interesting. Oh, there we go. Okay. Yeah, silver's not really got much going on either, to be fair. It's only a 2. So yeah, automatically no interest in silver. Gold's reading a 5, which kind of, again, it puts me off that short gold idea. But 5's not overwhelming in my view. Yeah, Ottoman, I agree. I think we will see Eurodollar continue down, but I think the catalyst will be sort of a resolution on tariffs. I think the dollar has a large amount of room to recover here. So far, the price action is very, very convincing. But again, who cares really about the price action? But yeah, if we can start seeing resolutions, I wouldn't be surprised if we can start seeing the dollar start to correct some of the impulse candles that we saw. So yeah, we'll see. So yeah, gold's got 76% COT long, 51% retail are long. Okay, seasonality is bullish. See, this is the thing. I personally just don't like the narrative for gold, but it's hard to argue when the data is suggesting otherwise. Tricky. Nothing I can do there. Platinum's very bullish, but I don't trade platinum. I don't think I've ever taken a trade on platinum actually. Russell, did Nick say he was in a Russell? I think I heard Nick say he was in a Russell trade at some point. Gaps being filled, rejection of the 200 moving average. It looks technically quite nice, actually. You know what? Maybe. And again, I'd have to do research on this because I don't trade the Russell. It's not something I keep eyes on really. But this might be an ideal entry point somewhere around here. Stop loss. I suppose you could have either a conservative stop loss here just below this wick or a little bit more aggressive here just below the low and the 200 moving average. Depends how safe you want to be. Take profit could be here looking for a correction of this there. You know what? I don't mind that. I'm going to do some research on the Russell after this. I think that might be a play. He's in it right now. Okay. Well, there we go. Well, that's enough of a signal. I can just go full margin on Russell. Excuse me. New Zealand yen's also getting a good reading of 9. Let's have a look. Yeah, that looks strong, actually. So this must have been the one I was looking at last week, but it's kind of old now. I quite like it. It's a bit choppy, but it looks a little bit predictable. Now, that might be famous last words, but it could be something like this, where it's essentially just chop to the upside. So if we could see a pullback, it might be worth just having a little go, low risk, see if we can get something running like this. Yeah, I mean, that's all the expert analysis I've got on the New Zealand yen right now. Do you think dollar yen will hit 146 by tomorrow? Let's see. Well, FOMC will be telling. I'd say it's possible, but of course anything's possible. I'm going to say yes. I'm going to say yes, it could reach 146 today. I tried to ask you earlier if you follow stocks at all. Not sure if you saw it. Are you mostly into Forex? You know what, Yoshi? I'm slowly starting to get into some stocks. I've got BBI, but I'll be honest, it's not my trade. I've got a guy that gives me some source. I'm looking to buy Apple as well, but stocks are not my thing. I've got no idea about earnings or any of that stuff. If it's low and it's a big company or it's something I have a feeling about, then maybe I'll buy it. But yeah, stocks are just a little bit over that line for me of what I really care about. I invest in long-term things like the S&P. I've got a bit of money in there. I've got a dividends, a dividends portfolio as well. But yeah, day to day, it's just Forex. Okay, let's see. Yeah, the thing is with trading, I think maybe it's position trading and investing are different, but when it comes to day-to-day trade or like active short-term speculation, I find it very difficult to have focus in different places. So, if I was watching yen crosses and dollar crosses, and I also wanted to trade gold, maybe, then I also had to pay attention to the stock market, commodities, maybe even crypto. It's just too much. There's too much going on. I'll get confused. I'm a bit of a simple person, really. I like to keep everything just straightforwards and neat. But maybe that's just a skill gap. Maybe I just need to get good. Okay. Yes, we're seeing pressure on the euro today. In fact, we've seen pressure on the euro for a while now. I say a while, it's been, 2 days? Excuse me. Apologies again about the coughing. It's just a bit of a scratchy throat. It's from all those, never mind. Okay. I'll be honest, I'm running out of things to discuss. So if there's any questions, let me know. If not, I can keep rambling. It's no problem. But in terms of markets, we've kind of covered everything that I was interested in, or everything that looks interesting. So risk on markets, just a recap. So we've got the S&P, Nasdaq, basically just stock markets up or reading bullish. We've got risk on sentiment overall, and that's driven by sector rotation, ETF flows, NVDA earnings anticipation, trade tensions easing, consumer confidence surge. So it seems like we are seeing a little bit more inflow now. How do you feel about the Nikkei 225? Do you think the Japanese yen could cause some bearish sentiment towards it? Not necessarily the yen. The Bank of Japan could, for sure. Actually, let's take a look at the Nikkei. It's not something that I watch really, but oops. Can't bloody spell. Nikkei 225. Right, there we go. Yeah, let's just have a quick scan. It's not really done anything, has it, for a while? It's kind of just sideways with two downsides. But yeah, it depends on the sort of development. So if we see inflation continuing to climb higher, that will start paving a way for the Bank of Japan to start hiking rates potentially. And obviously, rate hikes are going to be negative for the Nikkei, positive for the yen. So that's something to keep in mind. That's why you only trade one pair at a time. Makes sense. Can you explain what rate cuts mean for currency strength and what it means for the stocks? Yes. So I always use the same example. So hopefully it makes sense. Let's say you own a company and you want to take a loan of, I don't know, let's say 100 million. Okay, so you want to take $100 million loan from the bank. Your excuse me, sorry. The lower the interest rates, that means you're going to have to pay back lower in interest. So let's say, I'm not very good at maths, but let's just say the interest, it's dollar sign. Let's say interest rates are at 2%, just for ease. Obviously, it's at 0.5 for Japan, but whatever. So that interest rate, you're going to have to pay, well, your 100 million back, as well as a 2% interest. So if these interest rates come lower, you actually, if it gets cut by 50 basis points, you actually only have to pay back 1.5. So that is beneficial. It's optimistic for companies and business because they can expand basically for cheaper. They can grow for cheaper, if you will. It's the opposite. So, sorry, when we have hikes, it's the opposite. So again, let's just take that 100 million, for example. And let's say we've already had the cut, so we're back at this 1.5% interest rate. Then we get the hike. Oh no, I'm having to pay back 2% instead of 1.5%. Then we get another hike. Oh no, it's 2.5%. So now it's becoming more expensive to borrow money. As for the currency part, it's a little bit different. So for the economy, if you've got lower interest rates, it's cheaper to borrow money, obviously, as we just discussed. So that encourages spending, it boosts the economy. If we have higher interest rates, it's more expensive to borrow money, so it slows down, it cools the economy. Oh God, I had another point now. I forgot what it was going to be. Yeah, so as we were talking about business, let's make this more personal. So if you had a house, if you wanted to buy a house for, let's just say, 250,000, the interest rates work exactly the same. So if you have higher interest rates, you have to pay back more on that. If you have lower interest rates, you have to pay back less. So that's essentially it. It's very straightforward, but it plays a huge role. I mean, that was kind of a nutshell example, but hopefully it gives you an idea of, why it's important. Yoshi, I've not spoken about Bitcoin. I can move on to Bitcoin in a second, though, if you would like. Actually, I've only got a few minutes left. Let me do that now for you. It's having a good run, actually, isn't it, Bitcoin? I feel like I've said this a lot today, but it's not something I really pay any attention to. But yeah, it's had a really nice run. Interesting. So we're triple topping. Turtle heading at 109. Okay, so because I don't touch crypto, I don't know what's going on with like the drivers of Bitcoin, if you will. Just from a technical aspect or a technical view, I would expect some sort of reversion here, just back into this 200, then potentially coming higher, retest this resistance, continue higher again. That's what I would expect. But obviously that's from a very rudimentary view of Bitcoin. To be honest with you, just from this, it looks like 150 could be quite a valid target to have. And again, I've got no idea. I've got no idea what's driving Bitcoin. So that could be a silly thing to say. I've got no idea. But again, just from technicals, 150 seems quite achievable. FOMC minutes, the market make big move? I don't think so, Timeless. I'd be surprised, but I said this last time, I didn't expect anything, and we actually had quite large moves, so could be wrong or could be right. 50-50. I'm short gold 30-20, thinking holding till news. Is it a plan? Your thoughts? I don't know, to be honest. I think holding in something like FOMC is always going to be a little bit risky because anything could be said. It's more, like I said, it's kind of like a bit of a 50-50. So let's just see, where are you short? 30-20. Oh, wait, hold on. Wait, what? 30-20? I've just realized what level that is. Why are you short since 30-20? Are you really stuck in this position? Please tell me you're joking. Yeah, I'm going to assume you mean 33-20. That would be more reasonable. Yeah, I think, Yoshi, you're right. I think this is probably what you meant. Okay, so if you're in this position, I don't know where your stop loss is. I'm just going to assume it's somewhere like this above the high. You've got, excuse me, you've got two options. Either close it and secure the money, or trail stop, or obviously leave your stop where it is. But that's the two things I would consider. I'm not going to tell you what to do. If your trade is still valid, hold it. But if you want to be just safe and you took it from just technicals, I would consider just trailing the stop loss and just reducing the risk. So sell 0.1 lot USD JPY can I hold? I don't know. I need way more information than that. Why did you take the trade? What levels did you take the trade at? You know, I need. You could have been selling dollar yen since 160. That would be a phenomenal trade. But yeah, I don't know. Hello, Nick. Is there always a fundamental explanation for all market movements? Kelvin, I'm James, but no, not really. I don't know. It's tricky to really answer that, because yes and no. So, for example, this candle here didn't necessarily move because of news. That's not really how it works. But if you're talking about movements in terms of like the general movements of the market like this, then yes, definitely. Excuse me again, sorry. The markets are always moving based on expectations, and that's the simplest way to really explain it. So if you're expecting, or if the Fed says something, let's say inflation's sticky, we're unsure about tariffs, blah blah blah. It's all. What else can we say? We're very likely they're going to hold rates unless we start seeing inflation start to cool, or even heat up. Their only real option is to hold rates. So people will start pricing that in.
What's up, James?
Oh, hey, James. How are you?
I'm good. Thanks for coming on today. I can go ahead and let you go. Appreciate you sharing your analysis. Glad that you're back after your vacation.
Cool. Thank you.
All right, guys, if you want to subscribe to James, if you liked what you heard today, we dropped his link in the chat right there. You can go sub to him on YouTube at FOREX James. And yeah, James, I think we'll see you back tomorrow.
Cool. Thank you, James. I'll see you later. See you later, guys. Thanks for having me.
See you. All right, guys, we are well over 3 hours into our stream, and I am here, which can only mean one thing. We are about to do an Edge Finder giveaway. So, trading trivia, we've done this a few times before. We're going to do trading trivia again, but I want to show off our prize for just a second. If you win trading trivia, you are going to get a lovely, wonderful, fantastic Edge Finder. So we're playing for an Edge Finder today. It's game time, ladies and gentlemen. But this is not the only giveaway that we have going right now, actually. Really quick, I want to let you know about the other giveaway that we have going in our Telegram channel. So if we can drop the link to the Telegram channel, and I can actually show you a little bit of what that Telegram channel looks like. So this is our Telegram channel, and we are doing a giveaway for gold VIP membership access to our Discord. So by joining this link, it's completely free to join. You can enter in to win a gold VIP Discord membership. You could potentially win the gold VIP Discord membership and the Edge Finder completely for free. That would be incredible, wouldn't it? But check out our Telegram. It's actually full of really useful information. We have clips from Nick's videos or the live stream of important charts that we talked about that day. Analysis on, different charts and whatnot that get posted daily. Special offers and some stuff like, Nick is doing like a little trading journal right here talking about forecasts and analysis for different things in the market that you won't see anywhere else. So it is actually full of super useful information. And again, we have a free giveaway going on right now. So go ahead, join the Telegram. We dropped the link in the chat right here, completely free to join. Another giveaway going on. And we actually have if you're less of a Forex person and you're more interested in stocks, I saw somebody ask James a question if he was more of a stock trader, and James said that he was kind of getting into it. We also have a stocks specific Telegram where you can see Chris Pulver's talking about, trades that he dropped. We have stock box screenshots and analysis in here. If you're not familiar with the stock box, it's similar to the Edge Finder, except it's geared more specifically towards stocks. So yeah, lots of free stuff in here. I can drop that stock and options Telegram link here for you. So we have 2 free Telegrams that you can join, the stock and options one or the regular one. This one, the regular one, is the one that has the free giveaway inside of it. So you can join both completely for free, but this one specifically has the free giveaway for VIP Discord access. Now, we are playing, of course, for an Edge Finder. We are playing for an Edge Finder and we are playing trading trivia. Now, here's the deal. If you've played trading trivia with us before, it's been a little while since we've done it, but I'm going to go over the rules again, and I'm going to be very specific with the rules. I love to be very specific so that hopefully I can say this once, although I know it won't be the only time I say this. Anyway, here are the rules for trading trivia. First of all, we have 12 questions. We're going to start with 5 more stock-related questions. Then we are going to move into 5 Forex-related questions. And then I have 2 just kind of random general questions for a total of 12. And after the 12 questions, whoever gets the question right first, your name is going to be put up on this wheel right here. We're going to do a random wheel of names. Whoever name is selected, you win the Edge Finder. Got it? Pretty simple. Okay. So now here are the actual game rules. Number 1, you must type out the entire answer. All of these are multiple choice questions except for the last 2. The last 2 are not multiple choice, but they are very simple. So no need to worry about that. They are multiple choice A, B, C, and D. However, you do not have to put the corresponding letter. For example, if the correct answer is A, you do not have to type out A and then the answer. You can just type out the answer. I just do A, B, C, D so that it's clear. These are the 4 different answers that you can choose from. And finally, you can only get your name on the wheel 1 time. Now, I have the live stream chat up in front of me. I can see all the messages in the live stream. Now, if your live stream chat, this is the best part. You ready for this? If your live stream chat looks different than mine, sorry. I can only go off of what's right in front of me. Okay? So I'm watching the chat. I see messages coming in. I can only go off of what I have right in front of me. So type yes if you're ready to play. We have 731 people in here, so we should get a lot of answers coming through. Again, type out the entire answer. I'm looking for, on my screen, the first answer that has the whole answer typed out. You do not have to include A, B, C, or D, those corresponding letters, and you'll only get your name on the wheel one time. Okay, I see lots of yeses coming through. Lots of yeses coming through. That's good. Good luck, everybody. Yes, good luck, everybody. And again, we have 12 questions. So you have 12 chances to get your name up on the board. Once your name is on the board, you can answer if you want, but your name's not going up on the wheel again. So you can just sit back and relax until it's time to spin the wheel. And again, I'm going to say it one more time. I can only go off of what I see on my screen. If your screen says something different, if your name is ahead of somebody else's, sorry. All right. For the first category, like I mentioned, we are going to do 5 stock-related questions. Now, don't worry if you're not a stock trader. These are fairly simple questions, and they are multiple choice. So you can guess, I suppose. And again, do not put the letter. Do not put A, B, C, or D. Write out the full name of the answer. Question number 1. What is the name of the U.S. government agency that regulates the stock market? Is that the SEC, the FOMC? Is that Congress? Or is that the president? What government agency regulates the stock market? I see a lot of answers coming in. I'm seeing a 50-50 split between SEC and FOMC. In fact, I'm seeing more FOMC, I think, than I'm seeing SEC. Interesting. So I'm going to scroll up to the top. It's completely split between FOMC and SEC. I see on my screen who put SEC first. And also, I'm going to do something really quickly. But I'll do this first. So the correct answer is, in fact, the SEC. The SEC, the Southeastern Football Conference. Just kidding for all you who know what I'm talking about. The SEC, I am blanking on what it stands for. The FOMC is the Federal Open Market Committee. They are in charge of interest rates. We talk a lot about the FOMC on this channel. I'm moving this wheel over here so that I don't have to switch back and forth between trivia every single time I do this. But Babu, B-A-B-U, your name is on the wheel. Your name is on the wheel, Babu, I promise. Okay. Oh, I didn't even show off. Yeah, Babu, you were first. That was first on my screen. SEC is correct. Babu got the answer correct. Congratulations, Babu. Your name is on the wheel. All right. Yeah, FOMC is led by Jerome Powell. We talk about them a lot. They are in charge of interest rates on borrowing money from banks and whatnot. Congratulations, Babu. The SEC is in charge of monitoring the stock market and whatnot. Okay. See, this is what we're not going to do. All right. Question number 2. Question number 2. What does the S&P in S&P 500 stand for? Is it A, stocks and price, B, Standard and Price, C, Standard and Poor's, or D, Stocks and Poor's? S&P 500, something that Nick talks about daily. The 500 largest companies in the U.S., all bundled. Cat? Did you guys hear my cat? All bundled together into a index. I see Stocks and Poor's, Standard and Poor's, Standard and Poor. Somebody just typed the letter. Remember, I don't want the letter. I want the full name. That way you can't just spam letters before the question actually comes out. We had to learn that the hard way. I'm scrolling up to the top, and the first person to drop the correct answer, which was, in fact, Standard and Poor's, was Elify. Elify, congratulations. Your name came through first, and it is going on the wheel right now. Elify, your name is up on the wheel. Standard and Poor's. I don't know what that stands for, but that's the S&P. All right. Question number 3. What is the largest IPO in history? IPO means initial public offering. Is it A, Saudi Aramco, B, Apple, C, ExxonMobil, or D, Microsoft? The IPO, to my understanding, is when a new stock is available on the stock market. They have a certain number of shares. It's valued at a certain amount of money. And so one of these, when it was first introduced to the stock market, is the record for being valued at the most amount of money. A lot of people said Apple. A lot of people said Apple initially. Not as many people answering this one. It's between Apple and Saudi Aramco. 50-50 between Apple and Saudi Aramco right now. The correct answer, let me scroll to the top here. Okay, I've got the person that said the correct answer first. The correct answer is, in fact, Saudi Aramco. They're an oil company in the Middle East, Saudi Arabia, I would assume. And when they were introduced to the stock market, I forget exactly when. I put all this together yesterday. Largest IPO in history. It was 2019. The largest IPO in history was Saudi Aramco's IPO in December of 2019, raising approximately $25.6 billion. 25.6 billion. When they hit the stock market, their company was valued at $25.6 billion. Oil money. The correct answer, that was the correct answer. The person that put it through first on my end was Yoshi. Congratulations, Yoshi. Your name is going up on the wheel. Also, my favorite Mario character. I hope Yoshi is your favorite Mario character, or maybe Yoshi is your name. Look, Yoshi knows everything about it. Yeah, big Yoshi guy in Mario Kart, specifically orange Yoshi. You saw I had an orange cat. I like orange. Orange Yoshi, orange cat. That's my thing. All right. That was question number 3. On to question number 4. If you haven't got your name on the wheel yet, don't worry. We are on question 4 out of 12. So we have a little ways to go, but we are making our way there slowly but surely. Question number 4. What year did the dot-com bubble burst? Was that A, 1998, B, 1999, C, 2000, or D, 2001? I'm going to be right back. Somebody said 2019. Oh, maybe you were answering the Saudi Aramco question. Yeah, the dot-com bubble. If you are older than myself, you may or may not remember this. I sure don't, because I am 25 years old. And so this happened kind of before my consciousness, came into play. So I don't remember this, but it was a big deal. The dot-com bubble, websites, the internet, big important thing. You crack me up, all out. All right. The correct answer is the year 2000. The dot-com bubble burst in the year 2000. That's the year I was born, so I sure don't remember it. But maybe some of y'all do. The first person that put 2000 was, congratulations to Othmane. Othmane. You're getting your name up on the wheel. Congratulations. Your name is on the wheel. Year 2000, dot-com bubble burst, big stock market thing. The Nasdaq crashed. I was doing a little bit of reading about it. Compared to some of the more recent crashes that we've had, like COVID and the stock market in 2008, or the housing market rather, dot-com bubble didn't seem all that bad. I'm sure it was bad for a lot of people in the time, but yeah. Okay. Anyway, that was question number 4. This is our last stock-related question, and then I'm going to give everybody a chance to kind of regroup, refocus, because then we're going to head on into Forex questions. All right. Last question for this category. Question number 5. Is that it? Sorry, hold on. Surely it was more than 2%. The Nasdaq goes down 2% like daily now. Anyway, one last question for this category. Stocks, question number 5. Here we go. Donald Trump announced 50% tariffs on the EU, but paused them for how many days? This is not the first time that he's done this. This should be a fairly easy one. Was it A, 45 days, B, 50 days, C, 75 days, or D, 90 days? This is very much in Trump's playbook as of late. And you know what? So far, I guess it's worked. Can't really fault the guy if it's working, I guess. All right, I see numbers all over the place, but mostly the correct answer. Mostly the correct answer, which of course is 90 days. 90 days, he paused tariffs for 90 days. Congratulations to Kieser. Kieser FX was the first one to put through 90 days. You are getting your name up on the wheel. And that is our first category finished. Our first 5 questions down, our first 5 names up on the board. I'm sorry, guys. Hold on. Sorry about that. Kieser FX. Congratulations. All right. Let's regroup. Let's recenter, refocus. We have 5 more questions coming up in the Forex category. Hey, James, am I even eligible for spin the wheel if I already have the edge finder, or can one win the stock box, for example, too? You know what, Yoshi? If you want the stock box, if you'd rather have the stock box, I'm sure that we can make that happen. I don't think that would be an issue, especially for a loyal edge finder user like yourself. Okay. So, really quickly, again, I'm looking for the entire answer, not just A, B, C, or D. And I have the chat right here in front of me, the chat coming through. So I can only go off of what I see on my screen. So if your screen says something else, sorry, I promise. I am picking the first name that comes through on my side. Okay. Is everybody ready for the second half of trivia? Type yes if you're ready. Type yes if you're locked in and if you're going to get your name on the wheel. Also, if you happen to see this and you are not live, if you are watching the stream and slightly delayed, now is your chance to catch up and click the live button down below and fast forward ahead to live, because otherwise you are not going to be winning trivia. We've had instances where we've done trivia and then we'll be like 15 minutes past the question, and then one random comment will code through with like the answer to a question that we asked 15 minutes ago. And it's like, dude, I'm sorry, but you are way late. Or maybe you're just playing for fun. Maybe they're just playing for fun. Okay, everybody's ready. Here we go with question number 6 in the Forex category. Question number 6. What is considered the Forex capital of the world? Is it A, New York, B, London, C, Tokyo, or D, Sydney? Now, this is known as the unofficial Forex capital of the world because my understanding is it has the largest volume of Forex traders in this area. Out of everywhere in the world, the largest number of Forex traders is centered in this area, or the largest volume, not maybe not the largest number of traders specifically, but the largest volume of trades comes out of this area. Is that New York, London, Tokyo, or Sydney? Also, the 4 trading time zones. I see a lot of answers coming through. I see it split between New York and London. However, most people are saying London, and the correct answer is, in fact, London. London has the highest volume of Forex trades going through on a daily basis. New York, I would assume, has the highest volume of stock trades going through on a daily basis. It'd have to be. But London is Forex trades. So congratulations to, I'm going to say Malo. You're getting your name up on the wheel. I'm going to put your last name up on the wheel. That's okay. Malo, congratulations. Your name is up on the wheel. Oh, and guys, I should mention this as well. Make sure you stick around. If your name is on the wheel, make sure that you stick around to the end of trivia, because when I spin the wheel, if you're not here to claim your prize, I'm going to have to take your name off and spin it again so that we can make sure somebody gets their prize. Okay? All right, let's move on to question number 7. Question number 7 in the Forex category is, what time does the Forex market open on Monday, UTC? UTC, I think, stands for Universal Time Converter. It's like, it doesn't deal with time zones and whatnot. It's the Universal Time, Coordinated Universal Time. I don't know when it starts or when it ends, but I know that it's used in trading as opposed to like GMT time or stuff like that. UTC time, is that A, 12 a.m. UTC, B, 10 a.m. UTC, C, 12 p.m. UTC, or D, 10 p.m. UTC? See lots of different things coming through. This guy, MJL Forex's strategy, his strategy is to spam every single answer as fast as he possibly can in the hopes that one of them is right. I respect the grind. All right. Correct answer is 10 p.m. UTC. 10 p.m. UTC is the official start of Forex trading time on Monday. 10 p.m. UTC. Scrolling to the top. This was a tricky question, I know. And would you believe it? Would you believe it? MJL Forex, after spamming 10 a.m., 12 p.m., and 10 p.m., was able to get 3 answers off before anybody else submitted 10 p.m. So congratulations, MJL Forex. Your hard work pays off. That was a bit of a tricky question, I know, because UTC is not something that people normally talk about. However, I double-checked it, and it is true. Okay, that was a tricky question. That was a tricky one. But it was multiple choice. So you really, if you just guessed, you had a 25% chance of getting it right. Or you could be like MJL Forex and just spam all 4 as fast as possible. All right, question number 8, I believe. I think we're on question number 8. And question number 8 is, which is not a Forex trading session? A, New York session, B, Sydney session, C, Shanghai session, D, London session. I gave you a little bit of a hint about this a few questions ago. I brought up the 4 trading sessions. Everybody's spamming the right answer. This was an easy one. This was an easy one after a hard one. Everybody's putting through the right answer. Scrolling to the top. The correct answer is, of course, Shanghai. We do not have a Shanghai trading session. And Board. Congratulations, Board. You got the answer through first on my side of things here. So your name is going up on the wheel. Congratulations, Board. Shanghai trading session. Lewis is trying the MJL Forex strategy, but didn't hear the part about you can't submit just letters. You need to type out the full answer. All right, we're almost done. We have 4 questions left, and then it's time to spin the wheel. So if you haven't got your name up on the wheel yet, now is the time. Now is the time to do so. Moving on to question number 9 in the Forex category. Question number 9 is, what is the most traded currency in the world? Is it A, the pound, B, the US dollar, C, the Japanese yen, or D, the euro? Some of these questions I think we've had before. I know that we've had this question before, but hey, there's only so many intermediate Forex related trivia questions that one man can come up with. I see a variety of answers coming in. I see the euro, I see the dollar, I see the yen, and I see the pound. So we've got all 4 in there. Which one is correct? Oh, that's tough. Just got an ad before I could answer. Oh, that's tough. Sorry about that. All right. The correct answer is the US dollar. The US dollar. And I actually looked this up too. I double checked this. Out of all of the volume of Forex trades getting placed daily, I believe the US dollar is involved in, I think it was 85% of that volume. So, yes, the US dollar is the most heavily traded currency on the market. And the first person that submitted US dollar that does not have their name on the wheel already, I see Dragon K Inc. Dragon K Inc. Congratulations, you're getting your name up on the wheel. Dragon K Inc. All right. Take that down. 3 questions to go. 3 questions to go. Last question in the Forex category. And then we have 2 kind of general questions to wrap things up with. All right. Question number 10. According to forex.com, oh my God. I remember doing research about this. I forgot that I actually made it a trivia question. If you put anything other than the right answer, then you were not listening, because I actually just gave this away. According to forex.com, the US dollar is involved in approximately what percentage of all Forex trades? Is it A, 50, B, 75, C 85 or D 90. I remember doing like a little extra research on this today because I thought it was, or yesterday because I thought it was interesting. And in the back of my mind, I was like, I thought I wrote this down somewhere for like me to remember this information. I forgot that I actually made it a trivia question. So this should have been the easiest question of the day because I gave you the answer right before this. So, all right, I'm scrolling to the top. The correct answer, like I already said, is 85%. Whoops, that's on me. Jason, congratulations. Jason was the first person to throw out 85. Jason gets his name on the wheel. 2 questions left. 2 questions left to get your name on the wheel and win a free Edge Finder. Free Edge Finder. They're going to fire me? I hope not. Okay. 2 questions left. Do I have a buffer? I think I have a buffer. Hopefully I have a buffer, or we're going straight into question 11. Do I have a buffer? Yes, I do. Okay. Okay, cool. All right. 2 questions left. 2 questions left. And then we're spinning the wheel. 2 questions left, and then we are spinning the wheel. Everybody, gather your thoughts. Get ready. I'll give you a little hint. These are going to be A1 trading related questions. So, if you're a fan of A1 trading, if you're a fan of the live stream, these questions are for you. Okay? Now, everybody get ready, because question number 11 is, coming next month, who is joining the A1 trading team and sharing their trades in our VIP Discord? Coming next month, who is joining the A1 trading team and sharing their trades in our VIP Discord? This is something that we have said before on stream. They stream with us. Wow, I'm surprised. No, I shouldn't be surprised. I'm glad that everybody that has submitted so far has got the answer right. Everyone that has submitted so far has got the answer right. It is, in fact, Alan. Alan Perez is joining our team as our next A1 trading analyst. He is also a live stream host who usually streams with us on Tuesdays. He unfortunately is out this week, but he will be back next week. Alan is going to be sharing his trades in the Discord, and the first person to put that through was Emperor. Congratulations, Emperor. Your name is up on the wheel. And with that, we have one last question to go. One last question to go. This is something else that I brought up. This is something that, if you're interested in Alan's trades, you're going to be really interested in this. Here we go with our last question. Where can you enter the free giveaway to win a VIP Discord membership? I talked about this before we started doing trivia. We dropped a link to it before I started doing trivia. Where can you enter the free giveaway to win a VIP Discord membership, where you can see Nick's trades, You can see Alan's trades. And you can see Ivan's trades. Everybody's getting it right. Everybody's submitting the right answer. Yep, it is in fact the Telegram channel. The Telegram channel, whose link we can drop again right now one more time. Because, like I said, you can win the free VIP Discord membership and see all of Alan's trades, Nick's trades, Ivan's trades. It's a free giveaway. Plus, there's a lot more useful information in the Telegram. Telegram is the correct answer. I'm scrolling to the top of the chat. And the person who submitted Telegram first was Sharmore. Congratulations, Sharmore. Your name is the last name up on the wheel. And just like that, we have our 12 names. We have our 12 names. And I am going to do this. Let's bring this over. Okay. So remember, I mentioned that you need to stick around if your name is up on the wheel, because we need to make sure that you're still here so that we can get you your prize, which is going to be a free Edge Finder, a fabulous, fabulous Edge Finder. Or in Yoshi's case, because he's already an Edge Finder user, he asked for the stock box. And I think we can make that happen. All right. You ready? Here we go. Also, the link was dropped in the chat for the free Telegram. Join that. If you don't win the Edge Finder, if your name's not on the wheel, or if your name is on the wheel and you didn't win the free Edge Finder, sorry about that. But we have another free giveaway going. You can join that. We're giving out free stuff. Why not? It's fun. It's fun over here. All right. Wheel spin in 3, 2, 1. Good luck, everybody. The winner of the free Edge Finder is Mallow. Congratulations, Mallow. Let me know if you're still here. That was your last name. If I scroll up in the chat, I put your name on the wheel not that long ago. Let's see. Are you still in the chat? Let me know let me know if you're in the chat, or else I'm gonna have to spin it again. Oh, there you are. Yep. Congratulations, Mallow. You are the winner. You have won yourself a free Edge Finder. Yep, he's here. Nick, do you want to do support at a1trading.com? Okay. So this is the email. I think that's the email. Double check. Is this the correct email? Okay. Yeah, Mallow, you can email in to this email right here. Guys, we are going to double, triple check with Mallow. In fact, I'm going to send his name to our support reps right now so that we make sure that he gets the prize. So please, let's not spam the chat with people. Give away winner at everyone. Let's not spam the email with people pretending to be Mallow. He won fair and square. Whoops. Congrats. Yes, congrats. All right, he's sending over the email now. All right, guys, that's it for trivia. Thanks for hanging out with me. Congratulations again to Mallow. And remember, this is not the only giveaway that we're doing right now. You can also join our free Telegram with the link that we dropped up here. Maybe we can drop it one more time. Win yourself a free Discord VIP. It's free to join. Another giveaway. 2 giveaways going at the same time. How good is that? All right, guys, we are 1 hour away from the FOMC meeting minutes. Nick is in the back end. He's going to take over the chat or take over the stream right after this quick break and take us into FOMC. So we'll be right back right after this.
If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show. All right, guys, and we're back. Shout out James, that was awesome. Trivia is always a good time. You guys seem to love doing those giveaways and hanging out. James is just a fun guy to run those giveaways for us. So shout out James, shout out Chandler. Thanks for putting on such a great show here today. We are guys, we're 4 hours into this live stream since we hit go this morning. So we have been really going all day long. Like I said, shout out to the producers behind the scenes that make this show possible. If you guys are enjoying what you're seeing here with me as we count down, we've got an hour to go. We've got some time to look at some charts, and I'm excited to do that with you guys. If you could do me a big favor, if you're enjoying the show, if you're appreciating what we're putting out here, make sure to hit that thumbs up button on the stream. It just lets us know that you like the content. It tells YouTube that our content is maybe worth watching. We appreciate it. Okay, so with that in mind, we've got a full hour to go. I definitely want to ask you guys, if you're sticking around for a while, first of all, get yourself a cup of coffee, get yourself some tea, some water, whatever you drink. Probably not alcohol while you're trading. But if you've got some time, if you're sticking around, get comfortable. And if you have a question for me, let's do some questions during this live segment. If you have a question for me, we're going to drop a link really quick to where you can submit that question to our form here. So I'll show you just what that looks like. We did some questions earlier. It went really well. So if you submit your question, the reason we do it through a form like that is because if you ask it in the chat, sometimes I completely miss questions because the chat's going like this and I'm going through a chart or something. So if you have a question for the stream today that you would like to ask, take a second really quick while we're going here. I'm going to come back and answer questions, but take a moment to fill out your question. If you have something about risk management that you've been wondering, or if you're struggling with something in your trading, maybe you can't seem to get past trading psychology, or maybe your entries are off, or maybe you're struggling with fundamental analysis in some component. Ask anything you'd like, as long as it's trading related. I will do my best to answer those questions later on in the stream. So I'll give a few minutes for those to populate, and then maybe James or Chandler, you guys could just keep an eye on that just to make sure no inappropriate stuff gets dragged onto the screen. Okay, so let's talk some markets here. I'm going to do a little bit of an update. We did, of course, talk this morning about stuff, but we've had some interesting moves in the kind of intraday level here really quick to go through, which we can do now. So S&P 500, a little bit of downside move here. When did this turn around? Right after the stock market opened up here, we had indices start to move lower here ahead of the FOMC statement. Now, let me also clarify. I know I'm going to have to repeat myself on this. I do every single time. So what we have is FOMC meeting minutes today. And meeting minutes are basically scribe notes from a private meeting that the Fed committee does. It is not Jerome Powell standing at the mic giving a speech and answering questions. That's not happening today. People always wonder, are you going to show Jerome Powell? He is not speaking this afternoon. Today, we are getting a document released of a private update to the Fed's current kind of overview of their perspective on things. It is essentially the show notes or the meeting minutes of their conversations behind closed doors. So that being updated can move markets. It has in the past made some pretty substantial moves, although it's kind of up in the air whether or not it will produce any kind of substantial moves. We can talk Fed for a little bit. I definitely want to do that, but let me come back to that after I get some, let me get a little bit further into the analysis first. So let's see. Be careful, guys. This feels like a classic fake AI scam live. Don't worry, I'm not going to ask for your Bitcoin. Anyways, so S&P 500 kind of had a session low here form around 5,900, but we're still looking really good. In my opinion, I said this earlier, path of least resistance for the indices continues to look higher. I've got a collection of stocks. We have enough time today. We might be able to look at some, stocks and ETFs today as well. Nasdaq also looks good. Nice retest of these highs. Watching to see if we can get a breakout at this level. Very curious to see if we can get that kind of next leg higher, which, that could happen in a hurry. If you get something dovish today, it is possible for the Nasdaq to have a little bit of a breakout move. You've got this previous high here around 21,400 that we're testing the limits of. Support was found around this 20,800 level. Dow Jones also found support. Path of least resistance for the Dow and for the S&P and the Nasdaq and the Russell all seem to me most likely to continue to push higher. I've been talking about that quite a bit on my in my last segment. If I just sort for indices really quick, let's go Edge Finder top setups simplified. Let's go indices, and you can see pretty much across the board right now, we're getting a lot of confirming signals for the NASDAQ, for the Dow, the S&P, the Russell, the DAX. I want to look at the DAX here as well. But in terms of indices, where are we at? Well, a lot of bullishness. So I'm already long the Russell. So this is a trade that I am personally already involved in and do think that we have potential to make another leg higher here. If we get this kind of move, how am I going to manage this trade, right? So it's really important that we talk about trade management because, I always point out that I think that in my experience, right? Sorry, my mouse is getting caught on the screen. Entries, right, are what so many traders obsess over. Everybody focuses on entries, but I actually find exits to be way more important. Now they're both important, but the focus for so many retail traders is I got to get the perfect entry because they're so afraid, they're so terrified of having a stop loss get hit that they're like, oh my gosh, if I have a bad entry, it's all over for me. I can blow this account really easy, right? But what I actually find to be more important is entries are important, but exits are often overlooked, right? So what do I mean by that? Well, everybody, when they take trades, they're like, I want to get in at the perfect time. How do I know when the market's going to go up? How do I know when the market's going to go down? Those are like newbie beginner questions that everybody asks and searches up on YouTube when they first get started, right? They search up what's the best entry strategy for Forex or for futures or for gold or whatever, right? And what I found is that there are many different entries that can actually work fine. Really, it's about trade management, right? What you do after you're in the trade is really important. So for example, I have this Russell trade, which is a small cap US stocks ETF, or not ETF, but well, actually I'm trading the ETF IWM. But the Russell 2000, the underlying index is just a bunch of small cap companies. And so it typically moves with the indices, although it has a little bit more expected or implied volatility than the S&P 500. The Russell moves quite a bit. So if you're right, you can be really right. If you're wrong, you can be really wrong. And how you manage the trade is really critical. So I'm actually going to just pull up the 4-hour chart here for a second and show you. So I got in on this trade right here. And so what I'm looking for in terms of a place to manage my trade is if we can get a break through these highs and a solid close above, then I may look to take this trade where I have the stop loss right now and potentially move that into profit, right? So let's do this. So if I have my stop loss right here currently, right? What I'll do with this trade is I may choose to trail my stop loss. But what I need to see in order to make that stop loss adjustment is, like I said, a breakout of our key resistance here around 2100. So let's just say, for example, that in the next few days, we get a move that closes like that. If that occurs, what I will do is I will take my stop loss and, using the 4-hour chart and the daily chart, find a spot where it makes sense for me to trail that stop loss into profit to lock something in. Now, the way I personally manage trades is I use a trailing stop for my momentum trading strategy. I have two trading strategies: a dollar cost averaging strategy, which I use primarily in FOREX. And then for indices and commodities, I primarily use a momentum trading strategy with a trailing stop method. The trailing stop methodology follows basically market structure. So what I'd be looking for is something like this. If I get a close above, right, what I'm going to look for is I'm going to take that stop loss and I'm going to look for a spot below where there's clear support, where we found support on like the 4-hour chart. And that's where my stop loss gets moved to. From there, let's say the market reverses. Then I just take a small win. But then what if instead the market does not reverse and instead does that, we trail stops, and then it does one of these guys? From there, I will take that stop loss and again move it further in and lock more on the trade. And I will repeat that process until the market ultimately fails to break and create a higher high, higher low sequence, at which case I will get out of the trade. Does that make sense? That's the exit criteria for me on a trade like this. It's really simple. The concept basically being I'm using market structure to tell me when it's time to get out of a trade. So let's just do one last example of this. Let's say that from here, we get a move like this in the next day, and then we put in some sort of push like this. If that's what we're looking at, let's say we're here, and that's the path that we took. Price action is then telling me that, okay, price should not break and fail at this level again. We should hold that. So from there, if market comes down and tests that, that's fine. But if the market comes down and fails to hold that key area that we broke through, then I will just take profits on the trade, right? So that's how that works. That's for me, that's how I manage a trade. There are many different ways. Some traders, you know what some traders do instead? They say, I'm just going to take half the trade or a quarter of a trade off the position here, here, and here, right? That's another way some traders do it. Some traders choose to take partials. So they take 1/3 of the trade here. So they're long, right? Then they take 1/3 off. Then they take another 1/3 off. Then they take another 1/3 off. That's another method. Now, you might say, which one is the best then? What's the best exit strategy? Should I use a strict 3-to-1 risk to reward? Should I use partial profit taking strategies? Should I take 1-to-1 risk to reward? Should I take a trailing stop methodology? And my answer is, first of all, you should back test what you want to do and see which one works best for your trading style, your time frames, the markets you trade. You can answer that question for yourself. However, you might also, what you will find out is that no matter what exit strategy or entry strategy you use, it has pros, strengths, and it has cons, weaknesses, right? So trailing stops are wonderful when the market moves in a single direction. Trailing stops are the absolute best. So when you get it really, really right, like let's say you shorted right here and that market's just going waterfalling lower, trailing stops are the best. But guess what? If you take a 1-to-1 risk to reward trade there, you're going to be really annoyed because you feel like you left some on the table. So the next time you're like, well, I'm going to use trailing stops. And then the next time you use a trailing stop and you get trailed out, right? Before the move. What many traders will do is they will make the mistake of constantly chasing their own tail and changing what they're doing in the markets. Don't do that, right? Instead of taking a approach where you're changing what you're doing every few weeks, back test thoroughly, and embrace and accept the strengths and weaknesses of your system. I'm telling you what, that is the truth about trading. Is no matter what you choose, there are going to be times where you hate the way you do it, right? You're going to be like, this is so annoying that I do it this way because it's chopping me up or because I'm getting false entries. But the logical thing in your head when that's happening is to say, okay, I need to change what I'm doing. But what people don't realize is that that's what keeps you changing systems and losing a lot of money over and over. Everything has weaknesses. Nothing about trading is just smooth sailing profits coming in all the time. Doesn't work like that. And if it does, there are systems that have very high win rates and consistently make money all the time, but they have tail end risk, meaning they can have huge, you can have a system that looks like this, but what inevitably happens is you also have this. You have so if you have really small, consistent winners, you also have to embrace, you're going to have some big occasional losers, right? So nothing is the holy grail in trading. That's what many traders completely fail to accept, and it keeps them losing money. Embrace imperfection in trading because every system has pros, every system has cons. So I personally choose, my poison is trailing stops. They're amazing when they work great. They're very frustrating when you get chopped to pieces. So a little bit of a rant on that subject, but a very important one, I think. Dollar index finding some support around 98.8. We'll see if this one can break higher. I'm long dollar yen. Again, not a trailing stop methodology with dollar yen. I trade a mean reversion style dollar cost averaging approach on dollar yen. I am long on dollar yen, looking for more upside here. I wanted to get a second long entry down here around 140 or so, 141. Didn't quite get that. I'm looking at euro pound for shorts if we get a jump in price. Not quite there. CAD Swiss, I'm long. And just kind of sitting in that trade. I'm also long Kiwi yen or NZD-JPY, which is actually going really well today. That's going really well. We got a nice rally back in Kiwi yen. I still think that NZD-JPY is likely to make a push back towards this 89 level of resistance, which I am looking at that point as kind of a take profit level. Why do I use two different styles of entry and exits? Both involve fundamental analysis, but there's two different styles. I have a long video that I did over the past weekend on this subject, dollar cost averaging, and why I use it in Forex. But the long story short is that a lot of currency pairs tend to trade sideways, right? Whereas gold or Nasdaq, they tend to, over the long term, drift up and have been very trendy in the last decade. They've been very trendy. So two different styles for multiple different behaving market environments. So I do use more of a dollar cost averaging mean reversion style of trading with currencies, and I use a more trend focused one, tight stop, trailing stop methodology on indices and commodities. By the way, James mentioned it earlier, but if you guys are not in the free to join Telegram channel, we're doing a giveaway right now on VIP memberships. So if you would like a chance to win our VIP lifetime membership, it's 2 steps, very simple. Step 1, join the Telegram channel. We'll drop the link here in the chat. And step 2, click this link and just throw your name in the hat for a chance to win if you haven't done so already. Here's the link to the free Telegram channel. It is in the chat right now. 2-step process to join for a chance to win. And why not do it? Because you also get to keep an eye on all the chart markups that we're doing inside of the Telegram. Okay, so speaking of dollar index, do I think this is oversold or overbought? Well, currently, with the U.S. economic heat map pulled up, I'm still very much in the neutral camp when it comes to the dollar specifically. I'm long dollar yen because specifically I'm getting some pretty bearish readings on the Japanese yen. So when it comes to UJ, NJ, pound yen, right? Most of these I'm looking to be short the Japanese yen, which would mean long dollar against it, long Kiwi against it, long British pound against it, and short the Japanese yen because most of our economic readings have been bearish here recently. It's been pretty decent of a reading so far. I've been a little bit early to the idea. I got long dollar yen too soon over here, but we're back to almost break even on that trade. Hey, Balint, what's going on? I was on vacation and just got back. Looks like you've been streaming for hours. Respect. Balint, yeah, well, we had a couple other people rotate in and out, so I'm back for a second hour, but I did one a couple hours ago. So you probably saw the first and second half of my part. So we've got about 40 minutes to go until we get into the FOMC meeting minutes, see if there's anything interesting out of that report. I do want to also, before we push on, I'm going to look at gold in just a second. Wasim, thank you for that request. We'll take a look at gold in just a moment. Before I look at gold, let me just remind everybody, if you have a question for the stream, I'll be doing questions shortly, taking a look at what you guys have for me. So if you have any questions in terms of risk management, fundamental analysis, a chart request, whatever you'd like to ask the stream, do so using this link that's just been dropped in the chat by our support team or our producer here. Fill out that form. The reason I do that is because messages in the chat go like this, right? So I can't see them as well. So it's easier if you just submit it through that form. That way I can pull it up on the screen and have it in front of me. So I'll try and answer as many questions as I can as we go on in the stream. So taking a look at gold. So gold here, flat on the day. I did see that the edge finder is giving me a slightly, almost a bullish reading on gold. Is it still bullish? Yep, +4. So we're getting a +4 reading on gold right now. We're also getting a we're getting a +5 score on both gold and oil. Both are getting bullish readings on the edge finder. So if I pull up oil as well, both of these charts just don't quite do it for me in terms of the trendiness of them. They lack a lot of momentum. Gold looks great if I'm looking at it from like a weekly chart perspective. Like if I'm looking at the longer term view of gold, yeah, it looks very, very bullish. But if I'm looking at this thing from a last few weeks or 4-hour chart, right? 4-hour chart looks really choppy. It looks really back and forth, indecisive one way or the other. So I don't love the price action currently on gold. However, if I look at the 4-hour chart, this looks like it's trying to act like a little bit of a flag here, like it's wanting to do one of these guys. But we'll have to see. I think for me, if I'm going off the daily chart and I'm saying, how's my momentum looking? We still have a really nice upward overall trend. But at the very least, I'd be looking for a pullback into this kind of upward trajectory. That 50-day moving average. That's probably the where I'd look for at least possible entries. So I do like gold. If I had to choose a direction, obviously it would be bullish, but I like it a lot more if the setup actually kind of comes back a little bit, sets up in here. 3,200 to 3,250 looks possibly attractive for an entry. So I'll keep an eye on it. But I'm not in a huge rush because I have several other trades going right now. So I'm not in like a hurry to get a new position on. I have plenty of trades set up and a lot of them being indices. For oil, I'd be really interested if we could get a breakout. I've been watching for this for a minute now. Like if we could get something like this, like a break through these highs, I'll look for some opportunities there. Also, I tried to show this earlier. Let's see if I can, let's see if it'll work this time around. Okay, there we go. So what you're looking at here is the A1 trade tracker. It's just a way to look at all the positions that I have open. We've been working on this behind the scenes. It is still an early access version and has some issues. Like, for example, it is pulling the wrong price quote for the Russell. It looks like I'm in this ginormous loss in the Russell when actually that trade is in profit. It's just the price quotes on this software are not getting this right. Anyways, the general idea is what you can do here is you can filter by the different things that I'm trading here and current positions that I'm in. So if I'm looking at, all of my open positions in the A1 trade tracker, you can see I've got like some stocks that I'm long. I'm also long Kiwi yen, dollar yen, CAD Swiss, another CAD Swiss position. I have Exxon Mobil. So you can see all of my positions here. And this is something that is available to our VIP membership group. If you're a gold member and you have not yet gotten access to this, here is how you can do that. If you do not yet have access to this and you are a gold VIP member, we will drop the chat with us link. You can speak directly to our support team about it. If you are an existing member, and if you're not an existing member and would like to get access to the trade tracker, DM us and we'll give you some information. So there you go. Click that link right there and you can ask about the trade tracker. But I'm excited about this because it gives people a way to see all of my open positions in a view that is, really simplified. So some of the stocks, man, that I've picked up during the recent sell-off, like Tesla, Robinhood, and Uber, have gone absolutely parabolic. Like, Tesla is a monster. Have you guys seen this stock? Like, where the move here from the lows, 69% nice to the upside. If I take a look at it, for example, QQQ, take the absolute extreme low, this is 29%. So more than double the gains to trade Tesla longs as opposed to just long the Nasdaq. Obviously, it goes both ways. Tesla dropped way harder and rallied back way harder. So there's more risk, more reward kind of thing, but just kind of interesting. So anyways, yeah, I am in a Russell position. This, as I mentioned earlier, the trade tracker is something is incorrect with the price quotes for the Russell because the trade is actually in profit, but the price quote that it's getting at is incorrect. But like, you could filter this also for just Forex trades. So if you want to track the trades that I'm in, you can see there's my Forex trades currently in drawdown on all 4 of them. I have 2 CAD Swiss long positions, a dollar yen long, and a Kiwi yen long. These are my current positions. And if you're a VIP member, you can keep an eye on these anytime. I just closed out of an AUD NZD short position for a profit. So I'm out of that trade. And now just working with these ones. Why is the S&P 500 falling? I would say that it's not falling at all. It's gone nowhere today. We've gone pretty much in no particular direction. Now, if you're looking at like the 1 minute chart, it may look a little bit more meaningful, but just keep context in mind, right? Your daily chart tells you that the S&P 500 really hasn't moved at all today. It's been a really quiet day. Take a look at the Nasdaq, same thing. Russell's moved a little bit more, but still, it's not a very big move relative to, average daily move. So I asked you guys to drop some questions here. Let me see if we have any, if anybody had a question for the stream. A couple questions. If you guys want to ask a question, we'll drop the link here in the chat. I'm going to be going through some of them now really quick. So the first question, so I did, Lisa was where we left off from earlier. So these are our 3 questions. So if you have a question, drop it now and it will get added. You'll first come, first serve. So let's take a look. Brian says they've been trading for less than 1 year. Primary goal right now is to find a profitable trading strategy. I'm not able to accurate in analysis. This gives me non-profitable income. What is the strategy? So Brian, it sounds like you are trying to improve your accuracy in terms of when you do analysis, when you try and find a direction of the market, you're struggling to get on the right side of the market. Couple things for me that, I mean, obviously that's the golden question. People, when they ask these questions, a lot of times it's rehashing the same question is, when do I buy? When do I sell? Right? What's the strategy? And for me, I talk about it frequently in my videos and in my live streams. I use a 3-part process to analyze whether I want to be long or short a particular market or no trade at all. I use fundamental analysis, sentiment analysis, and technical analysis to create what I think is a more comprehensive, insightful reasoning behind why I want to be long or short a particular market. I will tell you this. I've been doing this for a long time on social media, and almost everybody I interact with stares at technical charts and is trying to find an edge by looking at candlestick patterns. Now, I am not saying that you cannot do that, but I'm going to tell you, if everybody is trying the same thing and very, very few people are making any money doing it that way, it may be worth looking outside of the box. And what I found when I started doing fundamental analysis years and years ago is when I listened to interviews with the professionals, right? And I'm talking about people who manage a lot of money, the greatest traders of history, people who the top dogs of this game. When I listened to them get interviewed, they weren't talking about candlestick patterns and support and resistance. They were talking about what the Fed was going to do, what the economy was looking like, what business financials were looking like, things like that, right? And so I started to say, okay, if they're paying attention to that, and everyone on YouTube seems to just be staring at technical charts and candlestick patterns, is it possible that technical analysis, while still useful, is a bit deceiving in that people think it's some sort of there's some sort of easy methodology, right? If it was easy enough to say that every time the RSI hit a 75 rating, you sold, and every time the RSI hit a 25 rating, you bought, and that was just all it took to become a millionaire trading the markets, no, there would be no markets, because who would want to take the other side? They would just do the easy, obvious trade. The point that I'm trying to make is that people who make a lot of money in this and who figure it out and actually do become profitable, they go the extra mile. And fundamental analysis is what I see all the professionals doing. And it's what I've done and helped me reach that profitability point in my own trading. So I would encourage you to explore the resources that we offer to explore fundamental analysis for free on our website, a1trading.com, or consider purchasing our tools to look through them. You might say, obviously, you're gonna push fundamental analysis. You have a product in that space, but it actually went the other way. I learned and found fundamental analysis to be incredibly insightful and useful in identifying market direction. And then I built tools to help automate that process. And now, yes, we do sell those tools. So if you don't have a copy of the Edge Finder and would like to explore it, head over to a1trading.com. You can research all about what we build and why we use the tools that we do to find market strategies that work, right? It's really, really deceiving out there, because a lot of people are searching up on YouTube, best Forex trading strategy, best, gold trading strategy. And they're looking for something that is just a really simple, a 7-year-old kid could pull that up and trade that strategy with no problem and make a ton of money, right? But the reality of the market is it's just not that easy. It's very difficult to make money in the markets. And if there's something that was that easy that anybody could pick it up and do, who wouldn't be using that strategy, right? Something to think about. Trading is hard. It's the reality. Okay, let's keep going. Next is Carlos. They've been trading for less than 1 year. Primary goal right now from Carlos, he says, where should I start? Primary goal is find a profitable trading strategy. Where should I start with trading? I'm planning to make it a lifetime thing, and got into trading by a friend. But recently I've gotten burned trading gold, getting a bit depressed, but hanging in there, and I like it very much. Yeah, so So I do this on the content side every day. And I tell this story sometimes. A couple of years back, I had a really big drawdown in 2022. And I went through it publicly on YouTube, and it was really painful. It was painful even in private. But as you can probably imagine your worst trading drawdowns being shown publicly. It's not a great feeling. And it's really, really psychologically difficult. Well, I made a decision in that year that if I was going to keep trading, I knew I was going to keep trading, but I knew if I was going to be doing this for the very long term in the public eye, I had to set aside the idea that I wanted to make huge returns from the markets and focus fully on generating returns with low risk. And so I reduced my position size dramatically in 2022, and I've never looked back since. My trading has been way more zen, way more relaxed. And even if I make a mistake, it's not going to kill me. Whereas there was a time, and I wasn't an idiot in 2022, but the markets were just crazy, and I just had, size that was a little bit bigger than I thought it was. And I didn't blow up. I didn't have any catastrophic failure or anything like that. But I went through a drawdown. It was psychologically very challenging. And I was like, okay, I want to reduce my size. You have to do something similar. If you're just getting into trading, look, accept it's probably going to take you the same amount of time that it would get to get an engineering degree, if not longer. I went to school for software engineering. It was hard. 4 years, I went to school for that. And trading was way harder. So it's not an easy thing to become. It's like probably the same. Well, I don't know. I can't speak for anything beyond what I did, right? I went to school for software engineering. Trading is way harder, to be honest. It is very, very difficult in ways that you didn't expect it to be. It'll take you an arm and a leg to become a profitable trader if you really want to do it. And even when you become a profitable trader, it's not going to mean making thousands and thousands of dollars extra every week or anything like that. It's going to be really, really humbling when you find out what being a profitable trader actually looks like. Being a profitable trader means you're beating this number per month. I said this earlier on the stream, and I really want to reiterate it. I asked someone when I was first getting into trading, I said, well, how much, what's a reasonable return for a profitable trader? And the person who I respected a lot, who had a lot of experience in the markets, responded to that question by laughing and saying, if you make anything over zero, you are doing phenomenally well. And I brushed that off. Young trader Nick, I brushed that off. I was like, yeah, right. I mean, good traders should be able to do this, that, and that. Then I realized years later, he wasn't kidding. If you can make above $0 in trading, you are doing so much better than almost everyone you've ever met or ever seen trading. It's humbling. It's really hard to make money in the markets consistently. And the people who are making money, guess what? This is the part you also don't want to hear. The people who are making money are making small, consistent amounts of money. They're not making massive returns. But you might say, but so-and-so on social media, yes, but that's a show, right? There's a lot of people who show off stuff, and they only show you what you want to see. They only show you their highlight moments, right? There are times where I have trades that I make $30,000 on a trade. That's a crazy amount of money to make, right? But I do my best to also show you that last week I lost almost 6K on a long on the Dow Jones. I have trades that sometimes lose $8,000, right? So I want to make sure that I'm doing my part as a content creator in the space to show you the ups and the downs. So profitable trading does not mean, oh, I make 30K here, there, and every other day. No, it means I sometimes get those awesome trades, but I got to pay for them. And I have to go through the mud, having ups and downs in order to get there. Right? I hope that helps. But just if you set your expectations way lower than they currently are for trading, you're going to be better off. Because if you set your expectations for trading very high, you're going to be very disappointed very easily. Trading is a great way to scale up money over time, but it's not a great way to make a lot of money and become rich in the next few years. Unless you already have a lot of capital. That's the reality. If you have a lot of capital, what you're doing, trading is the greatest thing in the world. But and I'm fortunate enough to be at that point where I'm like, I have a good bit of capital. I can leverage that or not leverage it in the traditional sense, but I can use that to continue to, grow capital over the years. But there was a time where I did not have that kind of capital. And it was very humbling to realize what profitable trading looks like. A couple percent on average per month. That's it. Because why so little? Well, because when you think you can do 10, 15% on average per month, what you don't know is that once you actually back test that concept, it's likely going to blow up along the way when you hit a losing streak. So if you want something that's consistent, but also generates returns, I found the sweet spot is like 2% per month is really, really good when compounded over the years. That significantly beats passive investing, but it also doesn't blow up along the way as easily. Next question is, let me just pull this up. Next question is from Vuen. I hope I said your name correctly. How long have they been trading? They've been trading for less than 1 year. Primary goal right now is to improve their trading psychology. Do you think that prices always follow global liquidity levels? No. Prices follow real world forces through fundamentals. Prices follow when there's more buyers than sellers. The price goes up when there's more buyers than sellers. The price goes down when there's more sellers than buyers. What influences those movements? Market sentiment, right? People freaking out about something or buying something, because they're euphoric. Those forces play. And then the other thing that plays the longer term trends are fundamental analysis. If Russia invades Ukraine, what does that do to the existing supply of oil? Causes the price to go up, right? Those are real world forces. That's what causes a huge surge in buyers versus sellers. But all this nonsense of market manipulation and liquidity grabs and all that stuff, it's fun to think about and think that you're really important. But the reality is the market's so big. There's so much volume. There's so many transactions that are happening. The market does not care about your $50 stop loss. And retail trading as a whole makes up a very small portion, especially if you're talking about like foreign exchange, right? If you're talking about foreign exchange, retail trading volume is like practically nothing, because most of the transactions are giant corporations moving money between, nations and banks, moving that money on behalf of clients. They don't care about a retail trader's stop loss. Are you kidding me? That's like a total, misunderstanding of how markets work. If you think the whole euro dollar is going to move just to grab a bundle of stop losses around a certain level, you can obsess over that all day long if you'd like, but I think that's a waste of time. Technical analysis, I keep it really simple because I think that's all you need for technical analysis. I don't think you need anything beyond market structure, support and resistance, throw in a moving average, little Fibonacci retracements, but that's like all you need, right? Excuse me, my stop loss is $70. Yeah, right. No, it's silly because it gets a lot of clicks, it gets a lot of views, and it sounds really fancy, and everyone wants to feel like they're important, just like, like the QAnon stuff. Everybody wants to feel like they know something secret and magical and mystical. We're humans. We want to feel special. Same thing in the trading world. For some reason, people obsess over this concept of like, you're my liquidity. I know what the banks are doing. They're trying to trick us. Meanwhile, they have no idea who you are. It's like the Thanos meme where he's like, I don't even know who you are. You know what I mean? Like, it's literally that in trading. Actually, yeah, that's a good point. James says you only see a liquidity sweep on illiquid assets. Yeah, like if you're talking about like a penny stock where somebody is like actually manipulating, because it's very easy to like manipulate a very low float stock or something like that, or like a meme coin that has like very, very slow volume or something like that, and people can manipulate that. That's different than like trying to manipulate the euro against the US dollar. the amount of sheer volume happening on every second is crazy. Could you look at the DAX? Yeah, so I like the DAX if it pulls back down to this level here. DAX looks really strong for a overall bull trend, in my opinion. And I think the path of least resistance with all the tariff stuff is that resolutions will occur. I think that the posture, the stance of the Trump administration, as well as the other nations involved in the negotiations, seem poised for wanting to make deals rather than wanting to send the world into a global economic recession. It's one of those things. If we were looking at a situation where nobody was budging, not the Trump administration, not other countries, and everybody was arms crossed saying we're not going to make a deal or we're not going to negotiate, if that was the situation that we were in, I'd feel really, really cautious and kind of nervous about stuff. But it seems like most places are like, okay, fine, we have our disagreements, but let's find a middle ground. That seems to be the posture. And that to me is constructive for indices and allows us to move on and look at other things. Inflation's cooling off. The Fed can probably cut rates this year. If anything positive happens with the tariff stuff, the Fed, I think, will probably cut rates even more aggressively. Because if the Fed sees that there's negotiations that are constructive, they'll say, okay, there's less likely to be that inflation worry around tariffs. Could it still be a thing? Sure. But if it's, a lot less than what they initially feared, the Fed may cut rates. And yeah, that could be, it could be a catalyst for the second half of this year. The other thing that's eventually going to start coming into the picture with the Trump administration is all of their less regulation, keep taxes low, which just pumps businesses, right? They love that. Now, again, as always, everything's controversial. You might think businesses shouldn't be given a bigger tax break or anything like that, but that's kind of the Republican handbook is like, tax businesses less. And in theory, they should stimulate the economy, spend more, employ more people, et cetera. And then there's a whole, controversial economic debate on trickle-down economics. That's a fun rabbit hole to watch. Again, doesn't matter what your opinions are on those things. That's the market's perception. So if we go back to when the Trump administration kind of took or won the election, the market pumped initially because it was like, oh, we're going to get less regulation. Banks are going to be able to do huge, companies are going to be able to buy each other and grow dramatically, right? There's some blocking that took place in certain companies trying to buy other companies, like anti-monopoly stuff, things like that. If there's less regulation, those companies could become even more profitable in certain ways. The perception is, again, positive for companies. Now, it seems like we've gone through the bad side stuff first, and it may not be over. Like the whole tariff and trade dynamic stuff, that's a huge uncertainty for the market that is not necessarily done. But it seems like right now, much less likely to be a major market crashing event, where it looked very scary for a little bit there back in March and April. Guys, we have 10 minutes to go before we get to the meeting minutes. So we'll have some coverage on that once it gets a little bit closer. Let me just remind you guys, we're doing a free giveaway here inside of our Telegram channel. If you'd like to take a second to join that giveaway, we'll drop the link here in the chat to where you can join the Telegram. So that to enter the giveaway, so what's the giveaway? We're giving away a gold VIP membership, which is a lifetime access to our chat room, coaching webinars, the trading signals that get shared by myself, Ivan, and Alan Perez inside of the VIP group. If you'd like a chance to win that, it is completely free to join. Step 1, join the Telegram channel, which has been dropped in the live stream chat by our producer. And then, so step 1, join the Telegram. Step 2, click this link right here to throw your name into the hat for a chance to win the Gold VIP membership. Like I said, it's completely free to join. And inside of the Telegram, we're putting a bunch of bonus clips and charts and markups and all sorts of good stuff. So there you go. Also, if you, let's see, what else can we do? So we talked a little bit about gold. Let's just recap where we're at with that. Gold still very in the neutral territory in terms of price action on the daily. I'd be very curious to see if we can get enough kind of steam going to get through those highs. Any breakout above those highs looks to me like a kind of a bullish continuation pattern, especially when you scroll out and you say, look, this thing is in a melt up, momentum to the upside. However, same thing kind of goes for the sell side. And I know that sounds like I'm talking out of both sides, saying it could go up, it could go down. I personally do lean a little bit more bullish. I've got some confirmations here. If I go to my simplified view of things and add in metals here, gold is getting a bullish reading technically on our system. So that's saying sentiment, technicals, and economic data are generally favoring gold. You can see where it's not so bullish is under the economic data. Dollar index looking a little bit mixed right now. But operating off of that, would I buy gold? Well, I probably would be more interested if it comes down in the next couple of days to like 3,200 on gold. That might be kind of a jumping point for the next leg higher. I just think that the risk to reward on a gold setup like that looks a lot better. Like if you get a push down to this area here, I could probably talk about getting something like this going. Now, see, I still don't love the risk to reward here. So if I try to get a little closer down towards this end, like if we draw in another support level, let's just do this, like where we really sharply reacted here. Oops. Like if I even waited for this setup, clearly look at how well price reacted in that general area. Like I feel like the risk reward around here and here is a lot better than where we currently sit. And plus with a +5 score on our system, while that is a bullish reading, it's not nearly as bullish as I am on like indices and things like that at this moment. So I'm interested in gold longs, but waiting. I'd like to see a couple days down. I'd like to get my risk reward to be a little bit more attractive. What's the price of the VIP Telegram? So our Telegram channel is completely free to join. We'll drop the link here again in just a second. You could join our Telegram channel completely free. The VIP version where you want to see the trades being taken, we offer a couple different membership options. If you'd like to join that or you'd like to see what that's all about, head over to a1trading.com/VIP or speak directly to our support team. We'll drop the link to chat directly with our support team if that's something you're interested in. You can see every trade that I'm in. So like, for example, I'm currently long the Russell 2000. It's a trade that I have on right now. So if I take a trade on gold, if I trade a Forex trade, if I place a commodity trade, if I trade oil, if I trade stocks and options, I trade a little bit of everything and we're very active. So if you're not in the group and would like to be, send us a direct message here, ask about our membership options. And if you have any questions about how that works, again, my team is available to chat with you if you have any questions. So what is Powell likely to say today? Well, let's pull up the Fed Watch tool just to get an idea of rate cut probabilities. So if I go out to 18th of June, so next month's meeting, pretty much not going to see a rate cut. This is telling you that the bond market thinks, and is not always correct, by the way, these things change, a 98% chance that the Fed holds interest rates steady at 4.25 to 4.5%. That's their current target rate. If we go out to July, however, to the July meeting, which is July 30th, you're talking about 2 months away here. There's only a 75% chance that we've held interest rates at current levels and about a 25% chance, give or take, that we have actually cut interest rates by this point. So the first time, however, that we actually get a probabilistic rate cut, meaning the market thinks that we are going to get a rate cut by the 17th of September, that's our first point. So at the 17th of September meeting this year, the market officially thinks we have probably cut interest rates by then. Okay. Now, what could change these variables? And do these variables change? How accurate is this? Well, they change a lot. If we get a strong NFP report next week, if we get a better than expected inflation report or a worse than expected, like inflation starts going up again, these things, these economic data points, we don't talk about them for fun necessarily. I mean, I do, but I'm a economics nerd. But if we're just looking at this from a market impact perspective, those things change these probabilities, which makes the market go all over the place. Gold, silver, indices, stocks, everything moves based on what we're talking about here. So, by the way, we've got 2,000 people watching. Hope everybody's doing well, trading safe in this crazy market this year. If you're new to the channel, consider subscribing, hitting the thumbs up button, and I hope that my stream here is benefiting you in some way. I'm going over right now the probabilities of rate cuts this year based on the bond market, which we can see through the Fed Watch tool. If we go out to October, here's where things get really interesting. At this point, and this is interesting because there are people, there is a crowd of people that thinks that the Fed's not going to cut interest rates this year. We can see that going out till October, right around Halloween. We're talking about some people thinking there's a chance, 23% chance, that we have not seen a rate cut by then. What about if we go all the way to December? It's looking very likely that you're going to get at least one rate cut by December. Very likely that you're probably going to get more than one. So I just wanted to map that out for you. That's where we're at. So if the Fed comes in today and says, we're going to wait and see, is that going to shock the market? No. That's kind of what the market thinks already. The market thinks we're going to wait and see until September. That's the way to read what we just discussed right there. So if the market's in wait and see mode, and that's kind of the bias here, it's not too crazy to say, well, that's probably why gold's not moving that much. That's probably why the dollar index is kind of sideways. Market's kind of in wait and see mode. It's waiting to see what the Fed's going to say next. Now, if you get something today in the next couple minutes from the Fed meeting minutes that is more dovish or more hawkish, meaning more likely to cut rates sooner or more likely to hold rates for longer at current levels, that could move the markets. What we'll do here, guys, is just a reminder. We're just a minute away. Let me just reiterate, because people always wonder this. Jerome Powell is not speaking. This is not a press conference. This is a meeting minutes, which is essentially show notes or scribe notes from a meeting that they had behind closed doors, they being the Fed committee, where they discuss their policy, their plans, etc. And we get the notes here showed publicly in just about 1 minute. Can that cause market moves? It certainly can. Does it always? No. We will see if there's anything of significant importance coming out of that report. I'm going to ask favors from the chat. If you find anything if you're scrolling through the internet and you find something faster than I do, please share with the class. Drop it in the chat. I'll do my best to share that with everybody here. I will also be pulling it up on my own. So just give me 1 second to kind of be at the ready for that. Again, that data will be dropping here in the next 10 seconds or so, and it could start to cause market movements in the next few minutes. We'll see. All right, let's see if we can get anything interesting out of this. Again, key things to be looking for would be signals of inflation, signals of the labor market, concerns that the Fed might have on either side of that could cause expectations for rate cuts to change. Gold looks so weak right now. It's just in consolidation. It's just sitting there. It's doing a whole lot of nothing. I mean, it depends which time frame you're looking at. But like weekly time frame even, it's been chopping around. Daily time frame's been chopping around. I guess if you're looking at like the 15-minute chart, it's been kind of trending lower here today for the day traders out there. We're just sitting at support here around this 4-hour chart, waiting to see how this reacts. All right, let me see if we can find anything in terms of meeting minutes, see if there's any movement there. And I'm not reading the report. I'm just looking for headlines that might have something of substantial impact. So I'm going to keep an eye on that for everybody here. If you find anything yourself that you'd like to share, please drop it in the chat. I'll try and pull it up for everybody. Also, another way to stay up to date with this is to make sure that you are in our Telegram channel. I mentioned this earlier. We oftentimes put together, reports on what's going on in markets. If that's something that would be beneficial to you, consider joining our Telegram channel. We'll drop the link here in the chat to where you can do that. It's a great way to stay up to date with the chart markups that I'm doing, as well as if this breakdown here today has been beneficial to you. We do all sorts of that stuff in our Telegram, in our Discord server. Both of those are free to join, and they may be beneficial to you in your trading. So take a second. Meeting minutes. Thanks, James. Participants agreed they were well positioned to wait for more clarity on the outlook. So again, wait and see, which was largely kind of expected. Officials said the Fed could face difficult trade-offs if inflation persists while labor weakens. Thank you, Kid. I appreciate that. Fed officials saw potential for difficult trade-offs ahead. I've got some notes on my end as well. Almost all participants, of the Fed, almost all participants commented on the risk that inflation could prove more persistent than expected. A little bit of hawkishness there. Fed minutes, the staff projection for 2025 and 2026 was weaker than their estimate at the March meeting. Staff projection. Not sure what that means. Still looking for updates on my side here. Tariffs much larger, broader than expected. Almost all participants comment on the risk that inflation could prove more persistent. Yep, saw that one too. So far, no major movements, at least what I'm seeing. VIX remains at 18.8 here, dollar index, holding its gains for the day, not making any substantial move. Japanese yen is lower today. Gold is flat. Silver down slightly. Copper's down. Natural gas down. Oil's up today a little bit. 1.5%, but still kind of stuck in a range. You got a lot of stuff here, guys, just making sideways movement. I would encourage not moving too aggressively in any direction with stuff. This is not a very impactful report, at least from what I'm seeing so far. I'm going to keep an eye on this. Some participants commented on changes in typical correlations across asset prices in the first half of April. Participants noted that a durable shift in such correlations or a diminution, I don't think I said that right, of perceived safe haven status of U.S. assets could have lasting implications for the economy. Okay, no, I see what they're saying. Participants of the Fed noted that a durable shift in such correlations of perceived safe haven status of U.S. assets could have lasting implications for the economy. That sounds like a fancy way of saying the de-dollarization trend that we've seen in recent months is concerning to the Fed, which makes a lot of sense. If you're the global kind of big bank and people are saying they don't want your bonds, they don't want your stuff, that they're citing risk to the bond market, which is a very valid concern, I would say. We know that the 10-year yield has not come down. People who are thinking we're going to get a ton of rate cuts this year, the issue is look at the 10-year. It's still very flat. We're staying at 4.5%, give or take. Where to watch FOMC? It's not a press conference. We've said that a couple times. He's not speaking right now. It's minutes from a private discussion behind closed doors with the Fed. News is a smokescreen. Gold to trade into fair value gaps and sell-offs as I'm okay. Thanks, Lee. Yep, that's correct. You know, we have something, what's, in my opinion, way bigger than all this today is NVIDIA. After the bell, you have NVIDIA earnings. I'm not going to stream them just because we've been streaming all day and I'm pretty gassed already, but that is going to be a huge market mover. This is the darling of Wall Street in the last few years, the leader of the AI trade, right? NVIDIA, the chip provider, the picks and shovels provider to this whole AI revolution stuff. They produce their earnings or share their earnings this evening. I am a shareholder. I own stock in NVIDIA. I don't have any hedges on the position. I haven't sold any calls. I thought about selling calls against my position, decided not to. I'd like to just hold the trade. I bought it during all this craziness. I added some more shares. I didn't get the low, but I added some shares around like 100 or so on NVIDIA and feel pretty good holding those shares. So I've got NVIDIA shares. I think this thing continues to go higher in the coming years. May not be an instant gratification player, but I do think NVIDIA has plenty of upside. And we've heard from their main customers, Microsoft, Tesla. These companies have reiterated that they do plan on spending significant amounts of money buying or continuing the AI race, if you will. It's a race. The AI stuff is a race, and NVIDIA is like the pit stop for these racers. Still no movement in terms of most markets. Seemed like most likely we just got kind of a reiteration of what we already knew, which is the Fed is likely to sit and wait. They don't feel pressure one side or the other on this mandate. How do I know that? How do I know that the Fed doesn't feel too pressured one way or the other? Well, we have the data. Why not look at it? If we're talking about inflation, the Fed is looking at CPI, PPI, and PCE. And they're seeing 2.3% year over year inflation for CPI, 2.4%, 2.6%. Their goal is 2%. It's not in critical levels, but it's also above target. But then what about jobs data? The Fed cuts interest rates when they feel they need to save the day or because they really can do so. They don't have any struggle. Well, here's the thing. Wage growth is at 3.8%, which is pretty good. So wage growth is above inflation. It's great. Job openings, however, have been deteriorating. Let's just look at it. If anybody is open to it, I know this may not be the most popular subject, but if you guys want to do a little bit of economic theory with me for just a few minutes, I'm going to look through some of this stuff. So let's pretend we're the Fed for a second and talk about the scenario. If we can go back, let's look at the last 3 years at job openings in the United States. Job openings have been deteriorating. Are they in disaster territory? No. Is this a Trump or Biden thing? Nope. I think it's bigger than those two. It's just, we went through a huge pandemic. It shocked our system. We are now almost back to pre-pandemic hiring levels. So when you put it that way, it doesn't sound very scary, right? If you only look at this component of the chart, you're like, oh my gosh, jobs are falling. Well, yes, but they're normalizing back to a level that we saw before all this stuff began in 2020, right? So we're kind of normalizing on the jobs data front. We're coming down, yes. What would be more disastrous would be if it accelerated down. These are job openings in the United States. So job openings are cooling off, but they're not crashing. We're not at disaster levels. So there's one component to jobs data. Wage growth in the United States, holding steady, just hovering around 4%. That's decently fine. What about NFP? Jobs have been coming in better than expected recently. Last NFP report, we expected 138,000 jobs added. A lot of people were panicking with all the tariff stuff, saying people are going to cut, layoffs are coming and everybody's going to stop hiring and all that. We didn't really see that. We saw jobs got added at a stronger pace than market analysts expected in both the months of April and the months of March, right? So that's our NFP reports. They've been coming in pretty strong. So if we're looking at unemployment rate, you might say, oh my gosh, unemployment rate's going up. Well, hold on. Wait a second. Let's take a look. Let's go back a couple years. Unemployment rate's still at a great level, right? This is not disaster land. I know, it gets a lot of clicks on YouTube to scare people and say, layoffs are everywhere and doomsday stuff does very well in the content side of trading world. But if you just want to be practical with this stuff, let's look at the data. We've got it in our tools. We can pull it up. We can show the stream. Let's just have a logical discussion about the state of the labor market and the state of inflation, which is what the Fed cares about. Ultimately, if you're an analyst, the Fed matters, right? What they choose to do, if they're pumping that, if the money machine's going burr, right? That matters to all of us as traders. Trying to understand their logic is a lot easier when you have the right tools in front of you. By the way, Chandler, if you don't mind dropping the link to try the Edge Finder for 30 days, if you'd like some information about where you can try the tools that I'm using here, click this link being dropped in the chat. You can fill out a quick form to request that information. So here's the thing, right? Labor data is at 4.2%. The long-term average, 5.7%. Right? That's the average unemployment rate. By the way, here's the trial link if you'd like to apply for a trial to the tools that I'm using here. 5.7% is the average unemployment rate over like the long term, last time I checked. So where are we at? We're at 4.2%. That's not disastrous. Unemployment claims. What about unemployment claims? Are people filing for unemployment at huge record levels? Well, let's go back let's see if we can go back further than that. Let's go back 200 days. Okay, we can't. This is all the data we have currently. Unemployment claims are not in disastrous levels at all. If you were at like 300K unemployment claims each week, yeah, then you're talking about scarier numbers. But we're not at scary numbers. Like, let's not convince ourselves that it's doomsday right now, because there's a lot of that all over social media. I'm going to try and give you just practical views of what the Fed cares about. Job openings, normalizing to pre-pandemic level. NFP, coming out better than expected recently. Unemployment rate, good levels. So if you're the Fed looking at labor data, are you panicking? No, probably not. You're probably not panicking if you're the Fed. You're saying, okay, so labor data looks okay. Doesn't look incredible. It doesn't look terrible. It looks okay. So then let's look at the other side. What about the other side of the mandate? The Fed cares about the labor market and it cares about inflation. Well, let's take a look at inflation. Why don't we? Because again, we have that data, courtesy of the wonderful team at A1 Trading, which is my company. We build tools for traders. If you're new, we have a lot of new people watching the stream today. I'm glad to have you here. The consumer price index over time, we're looking at the US. We could select other countries, but we're just going to look at the US for a second now. Inflation's been coming down for a couple of years. And recently, it's actually made substantial progress. Everybody thought inflation was going to spike dramatically. It still could, depending on what happens with tariffs and things like that. But recently, inflation has continued its multi-year descent. Target inflation rate for the Fed is 2%. We're still above that. So the Fed is saying the labor market looks to be okay. We don't need to do anything to save the day dramatically there. And inflation is coming down and headed towards our target. So if you're the Fed, what do you do? Maybe the answer is to do nothing for a little while. And I think that's where the Fed is at. If the Fed sees a couple more inflation prints that get down to 2%, we probably cut rates. And that seems to be where the market sentiment is at. And I largely agree with that sentiment. Does that make sense? I hope that was a practical breakdown of the data. We could also look at core CPI month over month, which has been coming in soft here recently, right? That's helping to the cooling economic or cooling inflation story. Here's the producer price index. We've had 3 in a row better than expected reports for the producer price index. Those are more inflation reads. And if we take a look at the the personal consumption expenditure, the Fed's preferred measurement of inflation, we've been trending lower and recently had some decent reports there as well. Right? So I think the Fed is at a position where they're just saying, we'll probably cut rates this year, but for now, we can afford to wait a little bit longer. I hope that was a practical breakdown that helped for those who are more interested in fundamental analysis. I've got 2 things for you. Number 1, we'll drop the link again if you'd like to try out our software tools. We offer a fleet of powerful market data for traders. Think of it as the Bloomberg terminal that doesn't cost you $25,000 a year. It costs you way, way less. So if you're interested in getting access, you can try it out first using this link here to apply for a trial of our tools. And the second thing I have for you is that if you're more interested in fundamental analysis and you want to learn, join our Telegram channel and subscribe to this YouTube channel. In our Telegram channel, we do fundamental breakdowns every single day on currency pairs, commodities, indices, and much, much more. We also post chart of the day videos and things that are beneficial to traders who are looking to learn completely for free. And we're also doing a giveaway in the group right now, so why not enter for a chance to win there as well. Okay, guys, that's going to wrap it up for me on this stream. We went for, oh my gosh, 5 hours and 15 minutes today between everybody that came on. I want to thank all the different guests that rotated on to the A1 Trading Show today. And a big thank you to the producers behind the scenes that helped us to keep the show alive for so many hours. Big round of applause for them. And also hope everybody who spent some time with us today got some value out of this stream. We do try and bring the most value we can to the trading community completely for free. And we appreciate everyone who took some time to watch markets with us. Have a great rest of your day. Be safe during the NVIDIA earnings, which come out shortly. They will likely cause indices, especially tech stocks, to move quite a bit. See you next time, guys.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.